Boom. All right, yo, what's up for everyone on the YouTube replay? I hope you're having a great day, great Sunday. Let me start this off with a quick portfolio update. Then we'll get into some of my stocks to, I think, are going to be pretty interesting next week. I know we have a lot of earnings, and then we'll dig into some of y'all stocks in the chat here. So yeah, I'll start with my Weebull portfolio right here. This is kind of like my risk on portfolio. We have a little bit of cash. We got $114 of cash. I'm looking to buy the dip. I did sell one share on Friday. This is the only thing I did. I sold one share of AMD and I bought one share of FUTU right here. And we're going to be deep diving into this stock right here. I can't wait to share with you some things I found out about Futu. And yeah, that's our Weebull portfolio. We have some winners and some big losers in here like UiPath, Sprouts Farmers Market. Zoom has been struggling. Progressive paid a nice little special dividend. But let me show you my Robinhood portfolio. And next week, I'm also going to be doing a little bit of buying. I'm going to deposit some money. But yeah, this is my dividend only portfolio. Year to date, we're up 1%, which is well, let me actually compare that to the S&P 500 really quick. We're up 1%, and year to date, the S&P is up 0.26. So we're doing a slight bit better than the S&P 500. Here is all the stocks that we own in here, and here's my total percent change on every stock. So luckily, we are green on every single stock in here, and we also have, our Roth IRA. Our Roth IRA is just a tax-free retirement account, and we haven't really done too great in here. We're going to be trying to deposit some more money in our Roth IRA. But yeah, hey, what up, Plasma, Nicolo? Are you getting any snow right now? Yeah, we've had the craziest snow I've seen since I've lived here today. Yeah, we have some crazy snow outside. I know what you mean there. Why has CEG fell so much? Yeah, this is another stock I'm probably going to dig into. CEG, Constellation Energy, they're down 22% year to date and down 17% the past year. So yeah, CEG is struggling a bit, and I'm probably going to be buying the dip on CEG tomorrow. I don't know. Seems pretty interesting. But I want to go over one stock that I just bought really quickly. That in my Weebull portfolio, I bought just one more share of FUTU stock right here. They do exactly what Robinhood does. I've kind of overlaid the chart of Robinhood versus Futu right here. And they kind of move together. They kind of rhyme together. But I want to go over Moomoo stock really quickly because this is one of my favorite stocks in the whole market right now to buy the dip on. They're very fair. If you look on the right, the forward PE is a 13. So they trade at 13 times next year's net income. I mean, that's a very fair valuation. We can see their number of users. It was the same time last year. It was 24 million. Now it's 28 million. We can see their client assets and all that trading volume. But if we look at the revenue, this is what's crazy. The revenue is up 86% year over year. So the revenue is up 86 and the net income is up by 143. So that's what's pretty insane. That means there's margin expansion. The net margin literally went from 38 to a 50. And this wasn't some one-time adjustment either. They made $413 million after they paid 82 mil of taxes. So they really are netting this money. And that's from the interest income growth. Their interest income segment is up 79% year over year after it grew 13, after it grew 126. So they're on just a streak of growth. Very impressive on their interest income. And they also have their commission side also up 90% year over year. You can't make that up. And then their smaller business right here, which is their crypto revenue, that's up 112. So just insane triple digit growth on every metric. That's why I think a 13 forward PE is very fair, very justified for Futu right here. And that's why I just bought one more share of the stock. Hey, what's up, Monkey D, Luffy, and Lulu? Hope y'all are having a great Sunday. How are y'all doing? Yeah, if you guys got any stocks you want to look at, let me know what to buy this week in your opinion. Yeah, I think Futu's a great one. Not financial advice. That's one I just bought one share of on Friday. But another stock I kind of want to go over is CEG, Constellation Energy. This is my favorite utility stock of all time. It's a great way to get exposure to the whole AI boom via the infrastructure because this is your number one nuclear play. I kid you not. They own 30% of all the US's nuclear reactors. So this is a pure play for nuclear, purest play out there, and the valuation's pretty fair. On the right, they're at a 26 forward PE. Pretty fair. And one of the reasons why the stock is falling, though, is because the administration is trying to like you like limit how much these utilities can charge for electricity because basically they don't want the electricity prices for households to go up because of data centers. So they're I don't know, it's some weird thing where they're like making corporations sign 15-year fixed contracts with these companies. But if this is the new reality, I still would want to own Constellation Energy. They're the best. Number one nuclear play, number one geothermal play, one of the best natural gas plays out there too. And they have the best share buyback program, best dividend and M&A program. Yeah, you get a 0.5% dividend yield, 26 forward PE. And check out the expectations here. The revenue is going to go to $10 billion in 2 quarters. The EPS is, but they had a little one-time adjustment 2 quarters ago, but they're always going to be making 280 or like $1.80 to $3 of EPS a quarter. So very fair company. That's why the forward PE is at 28. And I do own that one, so I'm totally biased, and I am still up a good chunk on them. We've owned them for a long time, couple years. We're up 39% on Constellation Energy, but yeah, year to date they're down 22%, and I'm legit looking to dollar cost average and buy some more CEG because they're just so great. Hey, what up, Mitchell? Good to see you. Say, hey, Brody. Bro saying PA never gets hit with this much. Hey, nice plasma. Yeah, the snow is crazy. Said Daily said, "Hi, can you search Intel stock?" Yeah, Intel, they reported earnings on Friday, and that's why the stock tanked. Yeah, wow. They fell 17% on Friday. This is kind of like your US chip fab manufacturing play. The government cannot allow Intel to go bankrupt. We just need that manufacturing independence here in the US. That's why the government took a 10% stake in Intel. Nvidia has a stake, and I think Apple, I don't know if this was true, but I was reading like Apple is planning to use Intel chips or something again. I don't really know. But yeah, they did not, I think, report good on their earnings. So the net income has just been so choppy on Intel. The good catalyst, the whole sentiment shift has been the government stake in the Nvidia news, but um, they do still struggle a lot with profitability, and the numbers do look a little choppy. But you really don't look at the net income because of the future. So this is probably a sentiment bottom. So I really don't know, sadly, what to say about Intel. They don't have a forward PE. They're worth 225 billion. So I'm kind of avoiding Intel right now. If you're looking for a chip, Taiwan Semiconductor is amazing. That's kind of like their number one competitor. Yeah. What's a good dividend stock? Well, hey, depends on what kind of dividend stock, because this right here, if you look in the top left, it's called my dividend only portfolio. These are all my favorite dividend stocks. Every stock in here pays a dividend, but some of these are more like dividend growth companies. Think Google, Meta, you know, Constellation Energy. So these are all my favorite dividend growth stocks. Actually, every stock in here also pays a dividend. The only one that doesn't pay a dividend is Amazon, and I'm totally okay with them not paying a dividend because they should just be investing in the future. Can you check Micron stock? Yeah, another kind of big AI play. This is your real memory shortage play. And the crazy part is, like, this looks like on a technical analysis really overbought. But if I was a shareholder on Micron, I'm actually going to recommend not selling or trimming my shares or your shares. Because here's the crazy part about Micron. They've been saying some comments, the memory shortage to extend all the way into 2028. Fitzgerald forecast AI-driven shortages through 2028, benefiting Micron and SanDisk. So yeah, these are your main memory shortage plays right here. And check out the EPS projections. This is what I don't believe. This was already a record quarter, $4.60 of EPS. It's never even been close to $4.60 before in the history. In next quarter, it's supposed to be like, this is what's crazy. This is why Micron is not overvalued, assuming there's not some crazy fixing to the shortage. But the EPS next quarter is supposed to be $8 and then $9 the quarter after. So if you kind of annualize that, that's $40 of EPS a year. And the stock is $400. So that's potentially a 10 forward PE. And check out what the analysts are saying right here on the top right. A forward PE of a 10. That's what makes Micron not this crazy overvalued stock in a crazy world. Like the EPS is literally supposed to go from $1.60 to $10 in a year. There's like quadruple digit EPS growth. Like it really is unbelievable. So yeah, that's what's really been leading to the gains in like SMH, the semiconductor ETF. Like Nvidia has been flat since like a couple months ago, but what's pushing this ETF up is, the like SanDisk and Micron. Pretty cool there. All right. Um, here's a cool one. NextEra Energy. This is a utility play. I like this one. What's up, George? And AG&C. Hey, what up, Story Room? That's like a mortgage REIT. So yeah, here's NextEra Energy, regulated utility in the S&P 500, a great dividend play. Like, check this out. If you buy the stock right now, you all like no matter what the stock does, you're getting 2.6% of your money back every year just in a dividend. And they raise their dividend quite a bit every year, faster than inflation. And they're pretty cheap. If you look on the right, the forward PE is a 22. So they own Florida Power and Light. So basically, they own the whole state of Florida's, utility infrastructure. Just in Florida, that does 4 to 5 bill of revenue a quarter. So they're getting into nuclear a little bit too. I think they signed like a nuclear deal with Google a couple months ago. But yeah, they print money. They eat like this was a one-time adjustment 2 quarters ago. Like they really did. They made like 1.8 billion. But yeah, on average, they're making like 1.8 bill of net income a quarter. And let's see how much a dividend costs for the fun of it. They make 1.8 bill a quarter. The dividend cost of 1.1 billion. So yeah, they can't afford the dividend. So I actually own a different regulated utility. So if we go to I'm a huge fan of utilities. If we go to ticker symbol VPU, this is the whole utility ETF, not financial advice. This doesn't even include the reinvested dividend. So the chart's actually much better than this. But on average, if you buy ticker symbol VPU, in my opinion, you should get 7% of your money back every year for the rest of the time, because that's just what these regulated utilities do. The government, if they don't get like at least a 3% return, the government like gives them that return just for free. So yeah. NextEra Energy is the number one utility by market cap. Then it's Constellation Energy, which I do own. Then Duke Energy and Southern Company are tied. I actually recommend as well, if you like NextEra Energy, I think you'll love Southern Company. I actually just bought them for the first time. We own 11 shares of Southern Company now. And here's kind of I chose Southern Company over NextEra Energy because not because it has a higher yield, but this is the crazy part. This one has a higher yield, a 3.38% dividend yield, and a lower valuation, a 20 forward PE, and I believe it's going to have higher growth in terms of the actual fundamentals here. So Southern Company is another one, just like NextEra Energy. I like them, and they've been performing better with the higher yield. So if you don't know which one to pick, just check out VPU. It's a great ETF that has like a 3% yield or close to. And should you just get 7% of your money back? It's a great defense stock to kind of have. Is copper worth it? I don't love commodities, but the precious metal commodities have been booming. Like silver's at an all-time high, gold's at an all-time high. I'm not sure what copper's doing, but I like the copper plays, like an Amphenol stock. They're actually the number one copper cable supplier for Google's TPUs and Nvidia's NVLink spine products. I kid you not. That's why this stock has been booming. But yeah, they're high-speed copper cable solutions for GPUs, TPUs. Google's a big customer, and Nvidia is too for Amphenol. Have you seen X Financial? Quite interesting. Hey, Furtive, what's the ticker symbol for X Financial? If you can give me like a ticker symbol, maybe I can check it out. Oh, I think we found it. XYF. You know what? It's a small one. I'd be real careful here. If you look at the top right, they're only worth 230 mil. That's just a really tiny market cap. I don't really like to trust these. Or let's see if we can find something though. So they do have they're actually making net income every quarter. So yeah, they must be a bank. Yeah, they really are making 50 to 70 mil of real net income a quarter. Hmm. So it's a Chinese bank. So all the revenue comes from China. Just beware of that. So yeah, they're headquartered in China. Provides a technology platform, personal finance services. So hey, it's actually not the end of the world. They are cheap. The valuation, but it's because they're Chinese. But they're certainly not going bankrupt. They really do make good net income every quarter. So it's actually I don't know why they're doing that bad. What are your thoughts on Uber? Yo, I love Uber. If y'all are looking for a quality stock to put on your watch list that's actually cheap, I'll explain why the stock is cheap. Check out ticker symbol Uber right here. You've all probably heard of Uber before. A lot of people thought like post-COVID that was like their big moment, but like the growth has continued to grow. If we look at their main ride-sharing mobility business, it's up 19% year over year. After it grew 26. Like these growth rates in the middle here are so impressive. There is no red. Just since 2021, it's just been up and to the right. And not just the mobility side, but the Uber Eats business, delivery. The delivery business is up 30% year over year, after 20% growth, after 6% growth. So both businesses are growing very impressively. And that's what I love about Uber. And here's the valuation. Let me pull up the PE forward. So we don't look at their current PE. It says on the left they trade at 10 times PE. That's not true. They've have these crazy one-time adjustments, but if we just look at the forward PE, it's a 24, which is still cheap. Uber is cheap on like every metric. So if you look at their active users, Uber has 100, or actually not just active users, but these are their monthly active consumers. They have 189 million monthly active consumers. At the same time last year, they had 161 million. So they really are growing their user count. All businesses are booming here. Yeah, as you can see, the EPS was 68, or analysts expected 68 cents. Since they did $3, they didn't actually do $3. That's why you don't look at their 10 PE. But they really did. They are printing a bill plus a net income a quarter, and the free cash flow is even better. They're doing over 2 bill of free cash flow a quarter. And that's how Uber can do these acquisitions. Like if we go to ticker symbol Grab right here, which is International Uber, I like to call it. The largest shareholder here is Uber. They own 13% of this whole company. And they own like 10% of another stock. I forget the name, but oh well. Yeah, Uber's pretty good. Mr. Phil, he said ALRDF. Well, I want to get to Netflix too. Don't worry. Hey, I looked up ALRDF. If you give me the name of that stock, the American ticker symbol. Yeah, give me the name of the company and I'll type in the name. It's probably a different ADR. Nuclear? Yeah, my favorite nuclear play is CEG. That is the best nuclear play to exist, in my opinion. Largest pure play for nuclear energy. They own 30% of all the US's nuclear reactors, and they're down 22% year to date. They have these fully paid off, fully amortized nuclear plants that just print money every month. All right, Micron. Hey, we just did Micron, sadly. Um, Maybe we'll get back to them in a little bit. Like we just did Micron. So let me pull up Netflix. Yeah, I see some people ask about Netflix. What's app you're on? Yeah, hey, Sharon. Yeah, it's Moomoo. It's in the link bio thing, link tree in my bio, first link there. So if you want to get this app, I'm on. So here's Netflix. They're very cheap, in my opinion. Well, not very cheap. They're actually at a fair valuation. But I agree, George, now's a great time to nibble on Netflix. You know, if you wanted Netflix as 5% of your portfolio, don't make it 5% today, but certainly maybe make it 1% because they are that quality. You know, people say don't catch a falling knife, but I think Netflix is so quality that this is one that's going to make a recovery in the long run. If you have the intention to just never sell, it's a great time to nibble on Netflix because it's a simple business to understand. It's just a subscription model. You pay them every month, and they have a lot of subscribers. They have literally 301 million premium subscribers and they make $11.69 in average monthly revenue per paying membership. And the valuation's cheap. If you look at Netflix on the right there at a 27 forward PE. So that's why I think it's worth nibbling on Netflix, you know, 27 forward PE. I really don't see it going much lower than that. Like the risk to reward really does start to look very attractive on Netflix, but could of course fall another 10, 15%, who knows, but I don't see it falling much more than that. But yeah, if we go to their bottom line, it's a super profitable company. These are the kind of stocks I love, ones that are already making a bunch of money. They're easily making 2.5 to 3 bill of real after-tax net income a quarter, and not just net income, but also FCF, which is free cash flow. So that's how they're able to do these acquisitions. One reason why the sentiment's kind of dropping on Netflix is because of this whole Warner Bros. Discovery merger acquisition. They're trying to buy them for like $90 billion or $86 billion, but Paramount's guidance is bidding $100 billion, and the more Netflix has to bid up the price, the more decretive it is to Netflix's EPS. So there's this whole dilemma around Netflix, but all I know is that it's just a quality company, cheap 27 forward PE, and they make a lot of money every quarter. Grab is fantastic. I recently returned to Southeast Asia, and Grab is like a religion there. Yeah, that's what people I see like YouTube shorts about that. They say don't, if you're touring somewhere, don't trust the local taxi people that'll, like price gouge you. You grab a Grab is what they say or something like that. Yeah, Grab's pretty cool, and it was a genius for Uber to buy them. Gave Uber instant international diversification. What about Singapore Airlines? Hey, what's the ticker symbol for that? Hey, Mr. Powell said BMNR, please. I think that's that Ethereum stock. So yeah, basically what this company does is it just owns a bunch of Ethereum. Like it mines, owns, and stakes Ethereum. So it's just kind of like a pseudo Ethereum play. I know Tom Lee is now on the board of directors here. That's what's some big news. Bitmine and Immersions expands Ethereum holdings to 4.2 million Ethereum. Um, Oh yeah, Bitmine invests 200 million in Beast Industries, literally Mr. Beast company. Mr. Beast was genius for this because he's taken their money. But yeah, Bitmine to invest in the Mr. Beast company. Isn't that kind of funny? But yeah, I don't have much to say about this stock, unfortunately. It's kind of just like a pseudo Ethereum play. You kind of just value them off the net asset value of their Ethereum and do some sort of compare that to the market cap. So I really, it's kind of like the Ethereum version of MicroStrategy. Hey, Deborah, good to see you. Hope everyone's having a great Sunday. Broadcom is another TPU play, huge VMware play too. VMware is really cool. Let's see. Broadcom receives multiple analyst upgrade. Okay, I think they reported earnings a little bit ago. So yeah, let's go deep dive into Broadcom. It's kind of like Nvidia with the higher yield. They are expensive though. Like even after this dip, they're still expensive. Like I wouldn't go crazy into Broadcom here yet, but it's certainly the cheapest they've been in a while. You know, the current PE is a 67 and it's going to a 39. Like they're having this year's 35% EPS growth. Like that's the trajectory we want to see. And you really do like a 2-year out forward PE. But yeah, a lot of people know them for their semiconductor solutions, which is doing great. Here's kind of the annual revenue. It hit a record for the full year 2025. It grew, wow, 35% just this quarter. That's a big bump from the same time last year. Like the growth rate's actually growing on their semiconductor solutions. That's what you want to see. But this is their huge VMware business right here. Check out how it just boomed from 2023 to 4. Like they used to do 1.9 bill of revenue a quarter, then it bumped up and it's just continued to growth. Like it's up 19% year over year after growing 195, like just continuing that insane growth, like after growing a bunch more. So anyway, Broadcom's a growth beast, like they really are. The revenue's still going to go from 15 bill to 20 billion, and they beat on revenue, they beat on EPS, and they beat on EBIT. They had a slight one-time adjustment to the EPS, so it wasn't that high, but they really are supposed to grow another 40% this year. That's what starts to make, that's really justifies this 39 forward PE. Like they really do deserve it. They're so quality. Yeah, they print in net income over 5 billion of real after-tax net income a quarter, and the free cash flow is even better. They're doing 6 to 8 billion of free cash flow a quarter. And at this growth rate, what's it going to be the same time next year? What's their margin? They're rocking, 30-40% net margins, and you get a yield here, 0.75% dividend yield. They raise it every year with inflation. So that's a nice little cushion. I really like Broadcom. I'd certainly put them on the watch list, but I wouldn't go crazy into Broadcom yet at its current price, but they're certainly quality. And they're actually, that's another one like Lewis has been saying, or said Robinhood. Let's do Robinhood. What's this app? Yeah, hey, this app's in the link tree in my bio. First link there, broker called Moomoo. But here's Robinhood. I do own Robinhood stock. Actually, all these apps are on the link tree in my bio, but they're affiliate links. But I'm a shareholder of Robinhood, so I'm totally biased, but oh my gosh, what am I doing? Let me analyze Robinhood for you. Hey, Samir, no way, dude. Thanks for those roses there. I do appreciate that. But yeah, Robinhood's another one that's really expensive, but they deserve a really expensive multiple because of how growthy they are. If you look at kind of the right there, the forward multiple, the forward PE is a 41. That's expensive, but here's what's so crazy about Robinhood. The revenue's up 100% year over year after it grew 36, after grew 24. So on a crazy streak of growth, but look at the total revenue. The revenue was 1.27 billion. Out of this 1.27 billion of revenue, they netted 556 million. And that's real. They really made 556 mil after paying 80 million to taxes. So that means their net margin is a 44%. I'm a believer that these brokerages are like the picks and shovels play of fintech. Every time you do a prediction market contract, crypto trade, stock trade, they keep a super high margin commission. We can see, yeah, it's super important to measure here. Their net cumulative funded accounts are at 26.8 million versus 24.3, a nice little double-digit growth rate there as well. So yeah, Robinhood I do own. This is one of my biggest regrets ever, selling out of Robinhood. I sold a lot of Robinhood way lower than where it is today, but I'm actually looking to buy more Robinhood. And actually, at the very beginning of the stream, the very first stock that I looked at is FUTU stock. It's actually a cheaper Robinhood, in my opinion. They're also kind of seeing the same dip Robinhood is, but in my opinion, they're more growthy than Robinhood. They're cheaper than Robinhood. They literally are at a like 13 forward PE. Yeah, by the way, if you want to support me, best I sell nothing. I have no course book. I have a YouTube channel called Nathan Robert. If you want to check that out, so you can just type into YouTube. So thanks again, Samir, for all the roses. He says, what about MAXN stock? I'll check it out for you. Maxion Solar Technologies. Well, yeah, there was some sort of little momentum spike there. So yeah, we don't really cover these kind of names. If you look in the top right there, the market cap, this is some micro cap. They're only worth $50 million and they're at an all-time low, some penny stocks. So we just like, these are like lotto tickets. It's hard to, you don't really trust money in these. Like, yeah, they have no revenue anymore. Yeah. So the revenue fell 80% after it fell 30, and now the revenue's zero. And they're losing an insane amount of net income. And when you lose net income, that money has to come from somewhere. So notice how the assets every quarter decline and the liabilities are way higher than the assets. So this company is almost like for sure going bankrupt, or, it's just, you can't trust that stock. It could be some little fun short-term swing trade momentum stock, but that's definitely not one you want to hold for the long run. I apologize there. What's your broker? Yeah, my favorite broker here, it's Moomoo. It's in the link tree in my bio, very first link there. If you want to use my affiliate link there, I appreciate that. So let's see some more here. I'm a little behind here. Oh geez. It's called Defense Holdings. Defense Holdings. I'm not. I just don't think I'm going to be able to find that stock. I do apologize there. Defense Holdings. Yeah, Mr. Phi, I apologize there. Oh wait, Defense with an S. Defense Holdings. Is it called ticker symbol SCAN? I don't think it is. I really tried to find that stock. I apologize. I could not find it. Can you show your holdings? Yeah, here on my well, I have so many portfolios here. By the way, if you want to see my whole entire portfolio, all the stocks I own, I'm fully transparent always. I make a bunch of YouTube videos sharing my whole portfolio on the streams and stuff. So, is Axon a buy? This is one of my favorite stocks ever, but it's like Palantir type expensive. So this is a body camera cloud play. SoFi earnings. Yo, someone said SoFi S&P 500 inclusion. Yeah, we'll definitely look at SoFi. They report earnings on Friday. I'm so excited. So yeah, Axon, they supply a lot of so many police stations now are like forced to by code have body cameras in their cars and on their, body. So Axon is the provider for that. They are the one that makes the body cameras and stuff. And they also own like the cloud network where all the videos get like uploaded to, but they're struggling with profitability right now. That's the tough part. Like if we go to their net income, it says they lost net income this quarter. They really did. They've had some one-time adjustments. They've actually lost money for the past 4 quarters in a row. So when we pull up this forward PE, yeah, the forward PE is a 500. So they're just like, it's hard to justify like a $48 billion market cap, $50 billion company with, no profits really. It's certainly supposed to improve over time, but it's just like so expensive. I love the top line growth. I love the industry. I think the whole entire UK police force uses Axon body cameras and tasers and stuff like that. But I would be very cautious buying anywhere here with anything significant, even over $500, because it's just they're losing a lot of money, which is unfortunate. But I do like, and they have like no free cash flow either. But I love the business, and they're on my watch list. They're on my never sell watch list, but I can't buy them yet, as much as I'd love to. How about Hollow stock? Okay, Hollow. Hey, this is another kind of micro cap. We don't really cover these, Samir. I apologize. But yeah, if you look in the top right here, like this whole company is worth $40 million. They're at an all-time low. Let's see if we can figure out why they're worth $40 million. So, they don't even report earnings anymore, and there's no analyst covering this one. Well, anyway, let's say you pay $40 million. You're buying a company that loses $4 mil, $25 mil, $200 mil. Now they have no revenue. Oh, and this is a Chinese company as well. So we weren't even looking in US dollars. So that's a Chinese company. So I would avoid that one. Again, these are fun maybe for swing trade or something like that. Thanks again for all the roses. I feel so bad. You gave me a bunch of roses and kind of bagging on a stock, but I just try and keep it real. I just can't really recommend those. They're just not too good. Let's do SoFi real quickly. Oh, and Donnie said Serve Robotics. I definitely like Serve Robotics more than Rich Tech Robotics, but both are a tough buy. I'll actually show you my favorite robotics play. after this. So here's SoFi right here. They report earnings on Friday. I'm very excited for it. The main metric, if you're a shareholder, you want to watch is down here, their financial services. Because this, if you're wondering, why is the stock gone up so much? Like, is this momentum sustainable? What caused this? It's this metric right here. Their financial services, this growth right here. No analyst expected this. Like it's up 80% year over year. After grew 101, after grew 222, after grew 264. Like it just hits a new record every year, every quarter. There is no red. It's only green year over year growth rates. And we can see the analyst expectations. This orange line right here. They beat on revenue every quarter for the past couple quarters. They beat on revenue. They beat on EPS and they beat on EBIT every quarter. So no wonder people are really starting to take SoFi serious. They really are making like 100 mil plus a net income a quarter. The top line revenue growth is insane. So I'm a shareholder of SoFi, so I'm totally biased. But I really wouldn't buy it at this price with anything meaningful because it is still real expensive. A 43 forward PE. So I'd maybe nibble on SoFi, but I certainly wouldn't buy anything too meaningful of SoFi, even at this current price, even a little bit off the top here. It's not a steal of a deal, but yeah, that's another one I regret every share I've ever sold of. I do own them. I'm up 300% on SoFi. We've owned them for a real long time. Sadly, trimmed most of my position, but I really like them. They have the best growth. So, hey, what up, Roland? I haven't seen you here. He says, can you look at OGN, please? Let's check it out. OGN. So, bought at 650. Wondering if I should hold long term. Let's check it out. So this is Organon. Not heard of them before. They're worth $2.5 billion. And they're at a forward PE of a 3.7. That's where does the revenue come from them? Okay. So 24% of the revenue comes from the US. The rest is international. It looks like they sell a bunch of different prescriptions like next Palanon or something. Let's check out their total, combining all those businesses. What's their total revenue growth year over year? So the growth has slowed down. Certainly, like if we look, the revenues only have 1% year over year. Last quarter was negative and then -6, -1. So it's kind of like low single digit growth that doesn't beat inflation, sometimes negative growth. So that's why I can understand why before today, this stock has been kind of, down and to the right. There's just no growth here. But if we go to the bottom line, like here's the thing. Like they're still printing money. Like they're easily making 100 mil of net income a quarter. The profits are down, a little bit from the previous year, down 8-10%, but still, I mean, they're still making good net income every quarter to the point where, look at this, they're making, call it 400 mil of net income for the full year. It was a little more than that. And the whole company's worth 2.5 billion. So that's how they're, they really are at a 3.7 forward PE. Kind of interesting there. They do have some leverage. Ooh, they have a lot of debt. The whole company's worth 12 billion. And what was their total debt here? Long-term debt. So yeah, they have 9 billion of debt to pay. Potentially 10 billion with their current debt too. So 10 bill of debt. The whole company's worth 2.5 billion. So they have a lot of leverage and we can actually check out the interest they're paying in their income statement. Let's see how much interest they're paying. So yeah, this debt cost them 130 mil of interest to pay a quarter. But remember, this is the after interest number right here. The cash flow and the net income. So they're still making. So it's a dilemma here. They're beating on expectations. Or they beat on revenue. I would maybe sell some of the position, but I wouldn't probably sell all of it because it's not terrible. Super low valuation. What's this app you're using? Yeah, hey, this app I'm on is a brokerage. It's in the link tree in my bio, very first link there if you want to get it. It's an affiliate link too, so it'd help me out. But yeah, broker called Moomoo. All right, Craig, what's up, dude? BlackRock Capital Allocation BCAT stock. Oh, let's check this one out. BlackRock Capital Allocation. So this looks like one of those dividend ETFs. Let's see the yield here. So yeah, check that out. A 22% dividend yield. What do they do? I don't know. So mortgage, is it like a mortgage REIT? I don't know. But yeah, you buy this to maximize your dividend income. Here's the stock price. It obviously doesn't look good, but you're buying this to maximize your dividend income. You don't really care about the stock price appreciation. So yeah, interesting little high dividend ETF play there. I wonder if that will total return outperform the S&P. ND said Visa stock. Yo, I actually really like Visa. You know who also owns Visa? that would be Nancy Pelosi. So we head over to the Nancy Pelosi portfolio right here. She's a shareholder of Visa. And Visa, this is like a dividend growth stock. They're actually very cheap, like surprisingly cheap. I didn't believe it when I last looked. They're at a 25 forward PE. Like, and it really is true. They're really at a 25 forward PE. Expectations are great. But if we go to the bottom line, this is great. They easily make 5 billion of net income a quarter. So if he's just making 5 billion net income a quarter, what are they doing with all that money? My favorite part about them is the share buybacks. At the top here, they pay 4 billion of that to share buybacks a quarter, and they can easily afford that. The dividend only cost 1 billion. So yeah, the dividend costs 1 billion, and they buy back 4 billion of stock a quarter. So that's why the net income fell 4% or 4.3%, and the net income per share only fell by 1%. So pretty cool. And they raise their dividend every year way faster than inflation. So it's just a very quality stock. You know, the small little micro credit card transaction fees that are slowly bankrupting us are making Visa a lot of money. Endorses credit card competition, proposing regulatory threat. Yeah, they're trying to like cap the interest rates for like 10%. Which, yeah, hey, this is a brokerage. If you want to get this brokerage, link tree in my bio, very first link there. Okay. TikTok glitch, don't log out of your account, someone says. Oh, well, hey, there you go. All right, what's your favorite software stock? Ooh, I really like Microsoft and Fortinet. They did have a little bit of a recovery on Friday. Netflix, but that's kind of like a subscription, but it is software. But where is it? Oh, it's actually on my Weebull watch list. Yeah, I was just doing a video, 10 software stocks to buy now. These are all the software stocks that are getting crushed. There we go. Every stock on the screen right here. Microsoft, Duolingo, Salesforce, Adobe, GoDaddy, ServiceNow. And I made a video. Fortinet, I literally made the video like when it was like right here. This is my favorite software stock to kind of buy on the dip. It would be Fortinet and honestly like a Microsoft. You can't go wrong buying Fortress Microsoft. Should I deep dive into Microsoft or Fortinet? Let me know. The app is superior to Robinhood. I agree, Adam, and I use Robinhood. Yeah, all these apps are all in the link tree in my bio if you wanted to get Robinhood or whatever too. They're all brokerages. But yeah, I really like this one. You know, with Robinhood, they make you pay like $5 a month. Well, if you look in the middle of my screen, you get a 3.35% APY. Don't have to pay any fees. Completely free, no commissions, no fees at all. Yeah, if you want to get this app again, link tree in bio, first link there, affiliate link. It's free. Okay, let's see here. Can you explain margin account? That just gives you the ability to take out margin. I have a margin account because I like it for the instant deposit bonus, but I never take out margin. I've never used a single dollar of margin ever in my life. But I have it so I can do the instant deposit bonuses, and then you'll know if you're taking out margin. You got to go out of your way. So yeah, I open a margin account as well. Okay, I'm behind here. Let's get to some more stocks here. Okay, actually, favorite software stock. You know what? Let me just do Microsoft because this one is so quality. I'll be quick about this one because everyone knows Microsoft, but I really can't explain how you can. It's impossible to go wrong buying Microsoft right now. I think if you buy Microsoft right now, not financial advice, you should get 8 to 10% of your money back every year for the rest of the time. If you look at the right, the forward PE is a 28. That's for a behemoth Microsoft, that's very fair, a 28 forward PE. They have this Microsoft 365, you know, think of Office, OneDrive. They have 82.5 million subscribers for that. That's this business right here, their productivity and business. This is their software business. This software does over 120 billion of annual revenue, and it's all high margin software. It's insane. So they've really converted from a hardware business selling PCs to software. It's insane. And not just software, but also they're a cloud play. One of my favorite cloud plays too, their Azure cloud also does over 100 billion of annual revenue. But bottom line here is their bottom line is over 25 billion a quarter. Like it's like Microsoft, like it's a stock where like, let's say the economy just 2020 event all over again. Like the stock won't fall. Like you can't lose 100% of your money. Like just buying Microsoft stock is so safe. They have a better credit rating than the freaking US government. Like there's a higher likelihood that Microsoft will repay their debt than the US government because they're so safe. They're making 27 plus billion net income a quarter. They're investing so much in the future. AI, Copilot, ChatGPT, cloud, software. You know, I just 28 forward PE for a behemoth that just like, it's a great place to park your money. Get it compounded in the market. I think Microsoft will give you S&P 500 type returns for the rest of the time. Like whatever the S&P 500 is doing. Should just be great. Noam said Lumen. Should we check out Lumen? Microsoft or Google right now? Microsoft, I think, is a better buy than Google at the moment. just because Google's run up a little more than I like. Okay, Ronnie said Palantir. I saw him saying that. Well, let me get to Palantir. I'm sorry if I missed it. I see I want to get to SRFM and Lamb Research and Nvidia. What about Nvidia Leggin? We got to do Nvidia and Bull. I'm so sorry if I'm missing some of these. So here's Palantir. I can't believe how impressive this stock is. This is why we always look at financials, because the fundamentals and financials totally explain why this stock has done so well. So a lot of this company's revenue comes from the government, a lot of police stations, the military, the Air Force, they all use their software. And if their government revenue is up 55% year over year, after grew 33, after grew 13, the growth rate is growing on Palantir's government revenue. But that's not the impressive part. Like, this is up 55%, super impressive. If we go to their commercial side, that revenue grew 73% year over year. I mean, it's so impressive. That's what justifies, in my opinion, their high multiple. It's still way too high of a valuation for me to pay, a 221 forward PE, but they certainly deserve a high multiple for beating on expectations like this. I mean, revenue's up 63. They made 500 million net income on that. Margins are expanding. No debt. Literally fortress balance sheet, no debt whatsoever. 6.8 bill of cash, just earning interest. So it's printing free cash flow. There's literally nothing wrong with Palantir. It's the type of stock I'd love to own, just too expensive. And that's unfortunate because they're so quality. Kind of like an app oven. App oven's great too. Hey, shout out to the member Louise. Hope you're having a great Sunday, dude. Mood actually said Bull stock. Let me get to Bull real quick. I do own this one. And even though if we look at this stock, like it's at an all-time low pretty much. Well, they just IPO'd not that long ago, but it says they're at an all-time low. Even at this all-time low level, Weebull is expensive. And I say all that as a Weebull shareholder. That's why I keep my position in this one so low. It's my smallest position. It's only worth $430. And I want it as a small position right now, but I want a small position, but I still want a position in Weebull because I'm more bullish than the analysts are on this company. And that's because I have a Weebull account. Here's my Weebull portfolio. I've been using Weebull for years, since 2021. I've seen what the app does, and I'm more bullish than the analysts are because right around the time Weebull IPO'd a couple months ago, they added in prediction markets and crypto and this advisory stuff and this Weebull subscription thing. They're doing so many different things. Like they have this thing where you can pay them $4 a month. I don't do that, but it's I think it's going to be way more bullish to the numbers than the analysts expect. The same way it did for Robinhood. Like the day Robinhood added in this prediction market stuff, it made Robinhood stock just moon. And I'm a shareholder of Robinhood. I'm a fan of the whole picks and shovels play of fintech. I'm a fan of Robinhood, SoFi, Futu, Coinbase, Dave. So I am bullish on Weebull for the prediction market reasons, because whenever you do a prediction market contract, they keep a 2% fee on that versus a normal stock transaction of 0.1%. So these prediction market contracts are 20x more valuable to their bottom line. So the revenue's up 55%, like they have great growth. Revenue's up 55, and they made 36 million net income on that. So they're just now getting profitable. So anyway, they're like a smaller Robinhood, like a niche Robinhood, but don't go crazy in the stock yet because they're still not cheap. Let's see here. How about Apple? Oh, Apple's a good one. You know what? I haven't looked at Apple in I can't even tell you. I haven't looked at Apple stock in so long. Yeah, they're kind of like Microsoft and Meta too, where they're at this. They've quite off all-time highs, and Apple's actually more expensive than Microsoft. Microsoft's at a 28 forward PE. Apple's at a 30. So a lot of people are locked in the Apple ecosystem. iPhone is 50% of the revenue. That's just hardware revenue. So they sell you the iPhones, and the iPhone revenue's been flat for a couple years. But the real way Apple makes money is through the services. Well, they make like a 22% margin on iPhone hardware, but the software is where they make their juice of money. They collect royalties. So every time you go to the App Store, so like $100, you go spend $100 on Clash of Clans, they keep 30% of every transaction. It doesn't matter if it's $100, you spend $1, they keep 30% of the transaction if you do it through the App Store. And that's where they have this super high margin services business. It does over 100 billion of annual revenue. So the more iPhones that are sold, the more devices that they just have out there, the more this should just go up. So the services revenue is over 100 bill. Then they have the wearables, the Mac, the iPad. And here's why they were really affected by tariffs if the tariff fear comes back. Only 36% of Apple's revenue comes from the US. They're also a big international play. Europe's 27, China 16, and the other ones. But they print money. Like Apple's a behemoth. They make easily 20 to 30 billion of real after-tax net income a quarter. Like it really is that good. And they have the largest share buyback program of any company in the world. No one does more share buybacks than Apple. Apple does on average like 90 billion of buybacks a year. So just think about that for a minute. Apple spends 90 billion of their after-tax net income every year solely buying back their own stock. So like it is so accretive to right now's EPS. Like they bought back like 10% of the company at like $100, and then another 10% at 160, and then another, like it's pretty crazy. So, and it's just a great stock to buy and never sell. If you have an Apple iPhone, you like Apple products, why not own some of the stock as well? So I can't go wrong. You get dividends. They do massive share buybacks. That's another reason why the stock just doesn't go down. So Logan's been saying for a while, can we look at Nvidia? Yeah, let's do Nvidia. We're looking at all the Mag 7s. Why not? We looked at Microsoft, Apple. Here's why Nvidia is actually attractive at right now's price. And people are going to call me crazy. One thing I don't like about Nvidia, I'd like to point this out, is the law of large numbers. If we look in the top right, Nvidia's worth 4.5 trillion. So if you buy the stock right now, for you to double your money, they have to be worth $9 trillion in market cap. So it's just a tough double. But I believe if you buy Nvidia right now at right now's price, you should still get 8 to 10% of your money back a year because the numbers are so phenomenal here. You won't believe the forward PE. So if you look at the left PE, you're like, yeah, Nvidia is expensive at a 46 PE. But when we look at next year's PE, it's a 28. It's actually kind of cheap, a 28 forward PE. That's why I wouldn't be shocked that's why we're not in a bubble. All the Mag 7's cheap ex Tesla and kind of Apple. But yeah, the EPS still has a lot of runway for growth. In 2 quarters, it's going to be $1.56. That's a record. Like this quarter was already an insane record, $1.30. It's never even been close to $1.30 before. Next quarter, the EPS is supposed to be $1.46. And then $1.50. So the year-over-year comp is going to go from 76 cents to $1.50. That's where they get that's how the forward PE is half of the current PE because the net income is literally going to be 40 billion bucks. It's just crazy. Like if another company can pull off this sort of growth, like here's their main business right here, the GPU sales, it's up 64% after 111, after 283, after 50% growth. Like if another company can pull off this sort of massive growth, they also deserve to be worth their market cap and at the margin. So look, Nvidia has a 56% net margin. And, the end of 2026, 2027 numbers are starting to, come down a little bit, but oh well. So the total revenue is 57 and they net 32 bill after paying taxes. I know Nvidia is trying to they were saying they're raising GPU prices because of the memory shortage. Y'all heard about that? Nvidia and Microsoft plan 15 bill investment in Anthropic. That's interesting. Nvidia invested 150 million in AI startup Bastin. What app is this? Yeah, hey, this app's in the link tree in my bio. Very first link there, broker called Moomoo. If you want to use my affiliate link, very first link in the link tree in my bio. Free app. All right. Nvidia becomes Taiwan Semiconductor's largest customer. Well, no, duh. Yeah, if you didn't know, Nvidia just designs the chips. Oh, actually, look at that. Nvidia has surpassed Apple to become Taiwan Semiconductor's largest customer, accounting for 13% of their total revenue. So yeah, Nvidia just designs the chips. They're all actually manufactured in Taiwan. But anyway, that's why I'm kind of saying here, I would not be selling out of Nvidia, certainly. Their GPU market share is at 24%. They have this automotive software that's actually now competing with Tesla. That's why I actually am really worried for Tesla stock. Their whole valuation is based off this, robo-taxi. Like I'm literally looking at the 2028, 2029 projections on EPS for Tesla, assuming these like crazy high per mile driven margin on robo-taxis and stuff and robotics. I feel like there's going to be a lot of competition. And, the Nvidia is the picks and shovels play. Would you buy Nvidia? I would. But I wouldn't go crazy in the stock right now. Ooh, should we look at Taiwan Semiconductor too? See if people asking about that. Top 5 ETF to buy. Well, I love the VOO. Obviously, most retail investors and hedge funds, cannot outperform. It sounds so boring, but it's true. That most retail investors and hedge funds cannot outperform the S&P 500's 8 to 10 to 12% CAGR. So if you can't beat it, own it. And I know it sounds hard, but even if it's just like the smallest percent of your portfolio, when not if but when, hopefully not when, but when you get outperformed by the S&P 500, you won't feel bad because even if it's like 10% of your portfolio, you won't feel bad because at least you own some of it. That's I kind of make my own kind of S&P 500. Almost all my companies are in the S&P 500. Didn't they just team up with Eli Lilly? They probably did. I see Google, SRFM. What was this one right here? Surf Air Mobility. So they're worth, yeah, a small market cap here. If you look in the top right, they're only worth $150 million. So just be careful with that market cap. You just probably want to keep the allocation of this one low. So they do 30 million of revenue a quarter. It's up 2% year over year. It's not a great balance sheet, twice as much really liabilities as assets. So they are a bit leveraged because, yeah. Ooh, so here's why I wouldn't buy this stock. Here's why they're struggling. If you kind of think about this just like very simply basic here, if you look in the top right, they're worth 150 million. So you could buy the whole company for 150 million. Let's say you do it. You buy the company for 150 million. Here's what you just bought. You buy an asset that lost 27 million net income, and then 28 million, and then 20 million. But it made a million, but then it lost 12 million, 36, 100 million. So that's where all these liabilities come from. And it's just like there is like kind of real bankruptcy risk. Let's see if there's short interest. Yeah, I believe it. 11% of this company is being shorted. So it could be a fun little momentum swing trade for sure. It'll probably like with the space stocks. Actually, this one has not been going up with the space stocks like Rocket Lab, ASTS, and all that. It's because of the fundamentals here. I can't trust this one because, the revenue growth wasn't there and they lose too much net income to trust. 150 mil company lost 30 mil just this quarter. It's tough. Ooh, watch out for that person in chat there. I'll never follow you, DM you. I sell nothing. I have no course book, WhatsApp, Telegram. I literally have none of that. That's my only account. Only thing I have is a YouTube channel. If you want to check that out, I'd appreciate that. I'm streaming on YouTube and TikTok, and I'm reading both chats here. You know what? Let me do Taiwan Semiconductor because this is one of my favorite, plays. So again, what we were just talking about Nvidia just designs the chips. They're all actually manufactured in Taiwan in Taiwan with Taiwan Semiconductor. And Taiwan Semi is actually now moving a lot of plants to the US to try and diversify away from Taiwan. But this is one of the most impressive companies I've ever seen. And even though it's at this all-time high level, I certainly wouldn't be selling. I wouldn't even be trimming a single share because I think it's going to go up another 20, 30%, like kind of easily, not financial advice. If you look at the right here, the forward PE is at 23. My thesis is I really feel like Taiwan Semiconductor, this forward PE could stretch up to like a 28, like pretty easily. So that could send this up another, 15, 20%. Like 23 forward PE is very cheap. They have the largest market share, 71% market share for these small, 5 nanometer, 2 nanometer wafer chips. And they have the craziest margins. Their largest customer is Nvidia and then Apple, the best US tech companies. So if we go to their total revenue this quarter, it grew 26% year over year. So that grew 26, the revenue. The net income grew by 72. This was the most impressive part. So what does that mean when the revenue's up 20, but the net income's up 70? That means margin expansion. They already had an incredible 41% net margin, and it grew to a 56%. It's just unbelievable. So yeah, literally, if you go spend $100 on one of their chips, they keep after taxes $56 of that. And they print free cash flow too. That's how they're able to pay a dividend. You buy the stock right now, you get a 1% dividend yield. They raise it every year. They're going to be raising it a lot faster too. But that's why Taiwan Semiconductor, it's not some crazy overvalued stock. Like they are super quality. So fortress balance sheet as well, deleveraging slightly. So I have nothing bad to say about them. Oops. All right. I'm seeing some interesting names here. Yeah, Micron as well. That's the chip shortage play. Should we look at Micron too? I'll be quick about Micron. So this is, another one that's not crazy overvalued. I'll be kind of quick about this one. There's this memory shortage right now. Because of this memory shortage, Nvidia just said they're raising prices on their GPUs. So, and like people are saying, Micron themselves, look, Micron warns of unprecedented, it's kind of the middle here. Micron warns of unprecedented memory chip shortage extending beyond 2026 due to AI demand. pretty crazy. Micron CEO announces plans for largest U.S. semiconductor facility in New York, create 50,000 jobs, and Fitzgerald forecast AI-driven shortages through 2028, benefiting Micron and SanDisk. So there's this huge memory shortage, and here's the thing. Micron can go up another 20-30% pretty easily as well because the forward PE is a 10. Here's where they get those numbers from. So if we go to their EPS, this quarter was $4.60. Next quarter, it's going to be $8 and then $9.30. If we annualize that $9.30, that's basically $40 of yearly EPS, and the stock's $400. So that really is a 10 forward PE. And it's just crazy. And look, they did $4.60 of EPS this quarter. That's the same as $5.25 billion of net income. So $5.25 billion net income equals $4.60. Next quarter is going to be 8 and then 9. So they're going to be making literally over $10 billion of real after-tax net income a quarter. So if there's some fixing of the memory shortage, then that'll be some sentiment. But it's pretty insane, some of these companies' valuations, where it's like not really that expensive. All right. Well, I saw some for Oracle. You know what? I see a lot for Oracle. What up, sicko mode? Let's do Oracle. So this one, I think for everyone on the TikTok stream, I think they finally finalized. Yeah, Oracle joins TikTok US for joint venture with 15% stake. So yeah, Oracle owns 15% of TikTok USA, not the whole company, but just the USA. And all the TikTok data is stored on Oracle's cloud, Oracle server. So this is I like to call this a pure cloud play pretty much. So I own a lot of cloud plays, their biggest competitors. The number one cloud market share is AWS, then it's Azure Cloud, then Google Cloud, then it's Oracle. Oracle has around a 6% market share. And there's a lot of questions around Oracle right now. They're highly leveraged. They basically have to spend like I forget what it was, but like $200 billion to get this like in-day payday of like $600 billion. I don't know. They have this incredible backlog, like literally a $200 billion backlog of orders. That's the day they announced that was this earnings report right here. The stock rocketed up. They had like a $100 billion order from like OpenAI and stuff. So here's the thing. The current PE is a 33, and on the right, the forward PE is a 33. So that means there's no EPS growth for the next year. But yeah, I really, they're more expensive than even at current prices than all the other cloud companies. Google's cheaper, Microsoft is super cheaper, and Amazon's cheaper, all on both metrics, forward PE and PE. So that's what kind of makes Oracle, and they're highly leveraged. Here's another thing. They pay a dividend, which I don't like. I'm not a fan of. So they have this 1% dividend yield, and it's a 40% payout ratio. So whenever they make this net income, this was a one-time adjustment. They didn't actually make $6 billion this quarter, but they did make like $4.8 billion. But they make like $3 to $4 billion net income a quarter. 40% of that, or $1.45 billion of that, instantly gets paid out to the dividends. So that leaves them, less money at the end of the day to, invest in the business and pay off this debt, because they have a lot of liabilities to pay. So I kind of like, if I just wanted cloud exposure, look at there is a lot of growth expected. Revenue is going to go from 15 to 19. But EBIT's supposed to grow too. I'm a little worried for Oracle. I just have like a weird feeling about them. Like, I don't know. But the risk reward certainly looks great. It's way cheaper than what it was. That probably wasn't too helpful. I apologize there. All right. Let's see here. Y'all got any more stocks here? Oh, hey, appreciate it. Yeah, if y'all want to hit the follow button, we stream every day, every Sunday, the same time. I sell nothing. I have no course. Figma stock, that's kind of like a smaller Adobe. Fun fact, Adobe tried to buy this company. The EU regulators didn't allow it. And as a termination fee, without acquiring the company, Adobe just had to give Figma a free $1 billion. It was pretty crazy. Figma got just a free $1 billion from Adobe because the EU regulators didn't allow the acquisition. But Figma stock, if you compare it to Adobe since its IPO, they nearly look identical. Adobe and Figma move very similarly. At my college, a lot of classes are like requiring Figma now. or it just comes with the class, but they're all using it. But this revenue growth is impressive. The revenue's up 38% year over year after it grew 50%. We don't get more numbers after that because they just IPO, but that's really impressive growth, 38% revenue. Since they lost 1.1 billion this quarter, they didn't actually. This was their like one-time IPO fee because the previous quarters, it's hard to tell because it's so skewed. But last quarter, they made 28 mil of positive net income, 45 mil, 98 mil, and they really did. Like they really did. So they're actually a profitable company. They should have a forward PE then if there's expectations here, but it's not really cheap here. They probably don't. Yeah, there's no. Yeah, there's just no. Well, it says the EPS is supposed to be negative for the next 2 quarters, but EBIT's supposed to be positive. I don't know. I'd be careful with software names. They're getting included in the basket of just all of software that's being tanked right now. Here's kind of the AI thesis here. They're saying in 10 years from now, will we need Adobe? Can we just get Google Gemini and ChatGPT to just, generate a logo for us or generate this art piece, make a thumbnail for you or whatever? And that is a real futuristic risk, I guess, for Adobe that is hurting their sentiment PE ratio right now. Hey, how about Carmen? KRMN. I own 50 shares. Let's do Carmen Holdings. They're on my watch list, actually. And then, hey, what up, VM6? Appreciate you. And then Louise, we'll look at Amazon after this, too. I actually just bought another share of Amazon. So, yeah, thanks again. Shout out to the member, Louise. So, Carmen, wow, they're at an all-time high. So, congrats if you own this name. You got to be up on your position. Let's see. So, they're a space and defense stock. Huh. So the current PE is 1,200. That's because they barely have any net income because they're just now getting EPS positive. But the revenue growth is there. Again, they just IPO'd, so there's not too much data we get. They've only been public for a year, but we can see the revenue is up 41%, then 35. So the growth rate is growing there, and that's the crazy part. They're net income positive. They really are. A lot of these aerospace and defense stocks like ASTS, Space Mobile, Rocket Lab, they're losing a boatload of money. Like they're nowhere near profitability. But Carmen is already profitable with like good margins, like surprisingly, like 41% gross margins, and they have a net margin. And I expect them to continue. Whoa. Revenue is going to go from 100 mil to 150 mil. So that's a nice 50% revenue growth. And they're supposed to be the most profitable they ever are in 2 quarters. Yeah, EBIT's up and to the right. That's what I like about Carmen. And, normally most IPOs that you see, they IPO, then they tank a bunch and kind of don't recover for a long time. But I really feel like the reason this one, when they IPO, they've been up and to the right because the fundamentals really are great. I can't believe how profitable they already are. I do got to commend them for that. So let's check out Amazon stock. This one's pretty impressive here. Yeah, QBTS, I'd be very careful with qubits. That one's tough to justify. So here's my Amazon. I've been dollar cost averaging into this quality company. You can't bet against Amazon. You don't want Amazon as your competition. You can't outspend them. You can't out innovate them. Amazon spends, if you go to the cash from investing activities, $25 to $38 billion a quarter on new assets, innovating in the future. It's super impressive. And they can easily afford it too. That's what I like about Amazon. They don't pay a dividend and they don't do share buybacks. They actually slightly dilute you every year. I don't mind that because they just invest so much in the future and they're really improving their bottom line. Actually, Amazon's almost a margin expansion play. If we scroll back to, 2022, this was a tough buy. I can see why Amazon was struggling. Like you're buying a company with like, no, sometimes negative net margins. It's a low single digit net margin. But look at the margins over time as we go up to right now. It's now a record margin, 11.7. It's never been higher than that before. So the margins are up and to the right. And here's their net income on that. 20 billion net income a quarter now. If we kind of average it out there, when we zoom out, just like the net margin, it's tough buyback here, losing a bunch of money. Now they've really fixed their net income. That's because of their AWS cloud business. They are the number one cloud play. Here's their AWS business right here. It does over 100 billion of annual revenue. It's actually like 130 billion because that's full year 2024. We're about to get full year 2025's numbers, but just this quarter it was 33 billion. That annualizes like 120. Like it's crazy the growth in the margin here. That's their highest margin business. They don't make too much margin, shipping you the same day delivery, Amazon package. That's a low single digit margin, but they make a juice of a margin on their cloud business. But this is an ETF in one. Like It's a subscription play, an advertising play, e-commerce play. They're like a Walmart, a UPS, Oracle, and Instacart all in one. They're my favorite robotics play, like AI play. I just love everything about Amazon, and you just can't bet against them. So that's why I just keep buying more shares of Amazon. And there's this, I guess this app's telling me that there's a little, what is this, a bearish flag, technical analysis. Who cares? We judge them off the fundamentals, and the fundamentals are phenomenal at Amazon. Got to commend them there. So Dio said SPX. Is that just the S&P 500? So yeah, that's just the index fund. We'll just check out the VOO. The VOO is just the index fund on an exchange. So an exchange traded fund on a brokerage. VOO, it's the exact same thing. So yeah, you can't bet against the S&P 500. It's just the top 500 companies in the US, market cap weighted. Most investors can't outperform the S&P 500. So I always recommend, own the S&P 500 as a little bit, or, have the S&P 500 as the backbone of your portfolio. Then play around with some individual stocks that you know and love. Like that's what I kind of do in my portfolio over here. Like invest in companies like Google, McDonald's, United Rentals, Meta, Amazon, Coca-Cola. These are all stocks I own and I really like. Okay. Is this Moomoo? Yeah, this is Moomoo. If you want to get this app, I'm on all these apps are on the link tree in my bio. Okay. Hi, Ultra said, look at SIDU. What is that? That's that like CDIS space kind of micro cap stock seeing some momentum. We'll be quick about this one. They're worth $240 million. I believe the reason the volume spiked up on this day is they got some sort of like a golden dome small contract there with the US. Not too sure. I'd still be super careful with this one. In the top right, they're only worth $230 million. Did they have revenue yet? So no. Well, I mean, the revenue is 1.3 million, down 30% year over year, losing 20 mil plus a year. So it's certainly one that's like nothing's really blowing me away here. I keep the allocation of this one very low. It could be a fun little short-term swing trade, momentum trade, but yeah, that one there's just like they have no revenue, losing money every quarter, micro cap. It's just careful with that one, I think. Here's a small cap that actually is interesting because it explains why the momentum has been sustained. That's why we judge them off the fundamentals, because it always moves the stock in the long run. Ondas is an interesting one right here. It's like an autonomous, I don't even know. Is it like a drone play? You know what? We'll have to look into that. Why not? But they've just been beating on expectations. If we look at this quarter, it was a record. They did 10 million of revenue. It's never been higher than that before. They did 10 million of revenue. And that was on a quarter where analysts expected 7 mil. They expected 7 mil. They did 10 million. But look at next quarter specifically. This is why I think the stock has done so well. It's really pricing in the growth of the next 2 quarters. Next quarter, they are supposed to do 28 million of revenue and then another 28 million the quarter after. So we're seeing a huge fundamental shift in the business. Revenue is going to go from 4 mil to 28 million year over year. Just an incredible year over year comp that's expected on Ondas Holdings here. So that's why I think that one's a little interesting. They are still struggling with profitability. They're losing a lot of money. But yeah, this is ONDS, Steve. Yeah, hey, sorry, my thing just kind of cut out for a second. Sorry if it lagged there. My Wi-Fi just cut out for a second. It's back. It's fully back. Okay, sorry about that if it lagged. But yeah, anyway, Ondas, they're still losing money every quarter, but it's really the top line growth you're watching here. If they can just beat on these expectations, I wouldn't be surprised to probably see the stock just to kind of continue to go higher. Keith said GOW about stock. Wait, Keith, let me know what stock you're talking about there. I don't know what you mean there. I don't think you're talking about GOW or I've never heard of that. Darn it, Brian said. Shout out to the member Brian. He said, I held USAR for 2 weeks last November, made 3%, should have kept it. So yeah, this is like a rare earth mineral play. If the war escalations, oh wow, check this out. The US government, I thought they did not get the US investment, but they did. So the actual US government is taking stakes into a lot of our own rare earth mineral plays. So think of MP Materials. They're investing money into Intel as well. We're trying to be more rare earth mineral independent in case geopolitical stuff war fears start to escalate, because China, like right now, we were supplying a lot of our rare earth minerals from China, but then they gave this weird export permit order where all US companies have to get a permit to get these rare earth minerals, making it really challenging. So the government's like, we need to invest in our own infrastructure. So USAR got a 10% of all the shares are owned by the government. So that's great. USA to develop metal alloy production facility in France with 130 million government support. So pretty interesting there. So I guess the future sentiment's in their favor. I don't think they have any revenue right now. Yeah, look, if we click on revenue, it says no data because this company still has never sold anything, not a product or a service. But in a couple like 2026 or 2027 numbers, that'd be interesting to look at there. HDFC Silver ETF. Let's see this one. Wait, HDFC Silver ETF. I type in HDFC. This is HDFC Bank right here. This is like an Indian bank, actually. I don't know if that's what you're talking about there, Saran. Let me know if I got that one wrong. Ooh, Mr. Breh said, can we look at ALAB? This is an interesting one. Astera Labs. I actually really like this stock. Oh, and we look at AMD too. So Astera Labs, someone said, would you enter the market right now, or would you not invest completely? You know, I wouldn't buy the indexes like the S&P 500 right now with anything meaningful. I'd still nibble on it, but there's some stocks out there that are attractive at current prices, like an AbbVie, or she just made a good video about that, a lot of different stocks. So Astera Labs, back to this company, has some of the most impressive fundamentals I've ever seen. In my opinion, the only reason the stock is off all-time highs is because they're insanely overvalued. But they deserve to be overvalued, but they're still a little expensive. Like, here's why they deserve to be overvalued. They really are impressive. This quarter, they expected 206 mil of revenue. They did 230. And in 2 quarters, it's supposed to be 260. Every quarter, they beat by a good chunk on every expectation. They beat on revenue. The EPS was a beat by nearly double. That's insane. So they expected... Sorry, my Wi-Fi. Hold on here. Hopefully that didn't. Okay, we're chilling. There we go. Yeah, so the EPS, they expected 23 cents. They did 50 in every quarter. It's like they beat by 100% of their EPS projections. And it's not like some one-time adjustment either. Like they really do beat. Like the EBIT, basic earnings before interest and taxes, expected 76. They did 96. So they're triple beating on every metric. The revenue growth has been triple digits for the past 7 quarters in a row. It's grown over 100% for the past 7 quarters in a row. And on this 230 mil of revenue, they're actually really profitable. The most profitable they've ever been, 91 mil, 50 mil, 40 mil. And just another cherry on top, that's just a huge safety net for this company, is their fortress balance sheet with no debt. This is a debt-free company with $1.13 billion of cash. That their cash is earned in interest. We can see exactly. They have $1.13 billion of cash for the fun of it. That earns them $11.5 million of just interest on their cash a quarter, which just adds money to your bottom line. So I can totally see why people are interested in this stock, and I am too. They're on my watch list. They have some impressive numbers. All right. Rolls-Royce coming to America, 40,000 jobs. Hey, what up, big man? So I hope you're having a great day. Good to see you. I hope everyone's having a great Sunday. Yo, if y'all want, you can hit the follow button. We stream every Sunday this exact same time. I sell nothing. We're just on here to give my opinion. So just looking at stocks, your all stocks. So, okay, it's an Indian bank. Let's check it out. So HDFC Bank, yeah. So we just converted the currency to US dollars. So yeah, all the revenue does come from India, but this is your number one like India bank play. Retail banking. Oh, then they're in insurance. That's kind of interesting. So wholesale banking, treasury services. So if we go to their bottom line, they, that's weird. We only have this quarter's metrics. That is kind of strange. Anyway, I wish I could give you more thoughts on them because we only have this quarter's data. But interesting name there. What's the valuation, I guess? 18 forward PE. So there you go. They're worth $163 billion. Abbott stock, ABT. Oh, Abbott. Let's do it. Abbott Laboratories. And then we'll do, AMPX. I see some people talk about AMPX. And what up, Charlie? We'll try and get to all these stocks here for sure. We're gonna be live for another hour. Don't worry. I appreciate all y'all being here. So here's Abbott Laboratories. What happened here? Let's see if we can see if AI says something here. Abbott Laboratories reports Q4 2025 results, misses sales, and issues 2026 guidance below expectation. So they lowered their EPS. So EPS guidance of $1.12 to $1.18 fell below the $1.20. It was like a 3% miss. Well, probably like a 5% miss. It's really not the end of the world. Yeah, that makes them cheap now. Check out on the right here, the forward PE. They're trading at 23 times forward PE. What's the yield on this one too? You get a 2.2% dividend yield, not too shabby. Dividend growth name. So they're in medical devices. How's that business growing? This is great. That's up 15% after 12, after 16. So nice growth, double-digit growth on their medical devices business. That's their main segment. They're also in diagnostics, nutritionals, established pharmaceutical. It's up 7.5% year over year. The US is 40% of all their revenues. So let's go see what they actually reported. So yeah, look at that. That is a bit of a weird miss. They expected 11.8 billion. They only did 11.45. So they missed on revenue, missed on EPS, and missed on EBIT. So it does kind of make sense now why they had this gap down. It's always the numbers, but it's really not the end of the world. Like if we go to their bottom line, this was a one-time adjustment, but like this was a record, like super great quarter. They easily are still making 1.8 bill in net income a quarter. So they made 1.78 bill in net income. For the fun of it, let's go see how much their dividend cost. So they made 1.78. The dividend cost $1 billion. So yeah, they can afford the 2.2% dividend yield. Interesting name. 23 forward PE. It's starting to get cheap. Oh, AMD. Okay, so try not to spam in chat there. Actually, let me get to AMD. There's like a lot of people spamming AMD on TikTok. Okay. Let me get to AMD real quickly. Hey, what up, Mikey? What up, 1998? So, what's up, y'all? So, here's AMD. I did actually just trim one of my shares of AMD. I couldn't resist. They were. I'm not buying AMD here. Certainly don't buy AMD at this price. But I did trim one share of my AMD just for the fun of it. With that money, I bought one share of Futu. I kind of like upgraded that a little bit. So I bought another share of Futu. But AMD has been one of my best performers. It's my largest holding there in my Weebull portfolio. I bought them because I thought they were an easier double than Nvidia. Because if you look at the market cap in the top right, they're worth $422 billion. It's easier for them to double $422 billion versus Nvidia. If you look at the top right, their market cap is 4.56 trillion. So for them to double that, that's 9 trillion, just a harder double. So I felt like it was an easier double with AMD, and I finally got my double on them. But they're expensive now. I wouldn't be buying them currently, but everything's headed in the right direction here. I think they got a huge order from OpenAI. OpenAI, which is ChatGPT, owns 10% of AMD now and are ordering a bunch of AMD chips, and they're training their model off AMD chips now. The forward PEs is 76, which is good, versus their 128 current PE. So they're going to have like 30-40% EPS growth this year, which is what you want to see. Then you do the next year out. So yeah, they're big in data centers. That grew 22% year over year after 122% growth. So that's some nice growth there. They're also in client and gaming. Looks like that's up 72% year over year, not too shabby. So they beat on expectations. That's another reason why the stock's doing good. They expected 8.75. They did 9.25. So they beat on revenue, beat on EPS, and they beat on EBIT. So they're triple beating. They make good free cash flow. That's what FCF stands for. They did 1.9 bill of free cash flow, 1.3 bill of net income, and a fortress balance sheet. They have no net debt. So pretty cool on AMD. Wouldn't buy it here though, but I'm a big fan, and that's like the last share I'll probably ever trim. I kind of just wanted to get to an even 10 shares, and it was at a price of like. So I'm never gonna sell another share of AMD probably ever. I'm just gonna let my gains ride. Hopefully, it potentially should never go back to my cost basis. I like this channel. Hey, I appreciate that. What was the one I wanted? Testable said AMPX stock. Yo, I am behind here, so I apologize if I'm missing some stocks here. I do want to get to all of them. I only try and spend 1 minute on each stock here. So Empress Technologies, they are on my watch list. They're a small one. They're only worth 1.5 billion, but that's also another thing people might like. Like they're only worth 1.5 billion. They could, it's easier to double that. So they're like in this alternative battery business where they're finally getting real sales. That's the interesting part about Ampress, and that's why I totally understand why this has had so much momentum. It's not just momentum, it's real fundamentals justifying this. If we look at the revenue, they did 21 mil this quarter, triple digit growth for the past 5 quarters in a row, and that beat the expectation. Analysts expected 16 mil of revenue, and they did 21. That's a big beat. And the analyst expectations are up and to the right. Like they're going to do 23 mil, 23 mil. And at the rate they're doing, they're always beating 20, 30%. So maybe they're going to do 25 mil of revenue. Annualize that. That's 100 mil of revenue a year. Sale of battery products. The US is only 30% of the revenue, but they're certainly expensive here. You know, but if they keep beating on expectations like this, I wouldn't be shocked to see them continue to climb higher. Yeah, 100 mil of revenue a year, forward PE, 1.5 bill company, no profits yet. How much are they losing? I don't remember that. Yeah, so this is another great news. They basically lose no money. They only lost 3 mil of net income this quarter, which is pretty insane. And they're fortifying their balance sheet. So yeah, pretty cool that their assets are growing, liabilities are flat. So that's the cool thing about AMPX. Yeah, I don't know if TikTok's glitching, but it says we have 700 viewers on TikTok. That's got to be my thing just bugging right now. But yeah, if you go and hit the follow button, we stream every day. We just look at stocks. Can we look at Apple and Sony? Let's look at Sony. This is a Japanese company. They actually own PlayStation. You probably heard of Sony PlayStation before. So yeah, this is the company that makes PlayStations. And they're in a lot of other businesses as well, which is pretty cool. So yeah, here's their PlayStation sales. They did 3.9 million PlayStation sales this quarter, but they really make their money. They sell you the hardware, the PS5, and then every time you go buy a game in the Sony store, they keep 30% of that as a high margin just fee. That's why games cost 30% more in the Sony PlayStation store, because they charge 30% more. So yeah, game and services, that's flat year over year. They're also in music. They have so many great music artists signed. The music revenue is up 17.5% after 14, after 10% growth. So Sony's an interesting name there. And they're internationally diversified. So the US is most of the revenue, then Europe, then Japan, Asia Pacific. So I just like all their different businesses, pictures, imaging, entertainment. And if we could just go to their bottom line, it's pretty easy. Like they're easily making 1.5 to 2.5 billion of net income a quarter. And you get a 0.7% dividend yield. So not too shabby. It's more of an international play. They're a Japanese company, but 19 forward PE. I think they were saying a little bit something about the memory shortage hurting them too. Sony and TCL formed joint venture. Anyway, Sony's on the dip right now. A lot of international stocks are on a dip. Sony and also Ferrari stock. I've actually been dollar cost averaging a little bit more into Ferrari. But, in this environment, you don't want to have these as major size positions. You keep it low. What platform or what app is this? Yeah, hey, Bella, or if you want to get this app, this is a brokerage in my bio. Very first link there. If you want to get this app, I'm on. My favorite app to buy stocks and stuff. What platforms you use? Yeah, I have all these apps I'm using are all in the link tree in my bio. I got all these right here. Weebull, Robinhood, Moomoo. All right. Let's see here. Hopefully I didn't just sorry, One second here. I'm okay. I think we're back now. My Wi-Fi just been having issues all day. Oh well. So we'll just go with it. Yeah, maybe we'll deep dive into race stock. BBVA is a Spanish stock. Okay. So let's check out this one then, if our Wi-Fi will allow it. Yo, sorry about this. If you can hear me, I apologize. If you want to hit the follow button, we stream every day, every Sunday, this exact same time. We're probably going to be doing another stream later tonight. But yeah, I sell nothing. All I do is just give my own opinion. I'm streaming on YouTube and TikTok right now. All right. Yeah, well, it still says we're lagging. The kilobytes have just not fixed on OBS, so we might just be cooked. All right, well, anyway, if this is working, let's look at BBVA stock. So they're at an all-time high right now. So, yo, congrats if you own this stock. You got to be up on your position. Let's see. Yeah, so this is a European company, so we'll convert the currency from euros to US dollars just to get a bit of a better idea. Um, dang, it's really not fixing. Is it this winter storm? At our house right now, there's the most snow I've ever seen, like ever. I've never seen more snow here or- since I've lived here for like 7 years. But dude, what the heck? I think my Wi-Fi really is just like fully cooked. I don't know what's going on. This never happens. So I just want to stream. Okay. Well, I appreciate if anyone's still here sticking with me here. Yeah. Let me try. I'm going to change Wi-Fi's here. I'm going to change my Wi-Fi. Maybe that'll fix it, but all right. I think we're good, but oh well. Banco Bilbao stock. I don't know what they do. Looks like they make great net income. Yeah, they make over 3 billion of real net income a quarter. It's actually insane. I can see why the stock has done so well. They really do print crazy net income. They have a 3.3% dividend yield as well. So they're a bank. Okay, so this is a European bank, a diversified bank is what they're saying right here. All right. Okay, yeah, okay. This says the stream's fully good. Thank goodness. All right. But who knows? Definitely the storm. Yeah. Pale says, bro, I'm in Georgia and have frozen ice all over. Yo, I'm also in Georgia and it's crazy. So yeah. Okay. Um yeah, the ice and the snow is the craziest I've like ever seen here. Okay, I think we're fully good now. I'm so sorry for everyone. Let's get back into the things here. Let's look at some more stocks here. What price is AMD a good buy at? Definitely like 20% lower than where it is today. Maybe back around the $200 level is where it's like a decent buy. Sadly, not anywhere. Yeah, it's not the worst of a deal though. I think Nvidia is a better buy than AMD at current prices. If I had to buy one just right now. So okay. Yeah, if you guys got any stocks you want to look at, we're finally back. Let me know in the chat. We'll definitely check them out. Charlie says GTEC stock. Let's check this out. Greenland Technologies. So, a really small one. So if you look in the top right, they're only worth $21 million. So that's a very small market cap. You just got to be careful with these. So transmission boxes for forklifts. So like a very niche industry here. What's the revenue like? So the revenue's 23 million. And they really did keep, 4 mil, 5 mil in net income on that. So I guess the margins are too. It sounds like a commodity here. Maybe we can check out their website right here. They have 300 employees. Yes, a leading developer and manufacturer of electrical industrial vehicles and power systems. So maybe they manufacture forklifts or something like that. Auto parts is the industry there. So interesting, kind of niche name there. So actually, here's the thing. Out of all the companies, like if you look in the top right, they're only worth $21 million. Out of all the companies worth $21 million, this is kind of one of the better ones because they are technically making on average, they lost money last quarter, but if you average out all the quarters, they're making a couple million in net income a quarter. But there's still so much more context we need there. Do APLD. Wait, did we just Applied Digital? Oh, this is that data center company. So Nvidia actually has a stake into this. Nvidia is taking a stake into all the data center companies because here's kind of what they're doing. Nvidia wants the Ponzi to kind of continue here. So here's the actual Nvidia portfolio. Nvidia owns CoreWeave, APLD, and Nebius. All three of these companies literally do the exact same thing. There's nothing proprietary here. All three of these stocks, all they do, they just own a bunch of Nvidia chips in a data center. But right now, these NVIDIA chips are in such demand from cloud computing businesses. So let's see if there's any news right here. APLD construction, 430 megawatt Forge campus. Well, that's interesting. Anyway, they've had massive growth from renting out the capacity of their GPUs to cloud companies. So if we look at this quarter specifically, this is why the stock is at all-time highs. And sorry if the lag's coming back. Just can't help it. But this quarter, they expected 81 million. Analysts expected 81 million, and they reported 126 million. That is a massive, impressive beat. So no wonder the stock gapped up so much on this most recent earnings day because they beat so massively on their expectations. They lost less net income than expected too. So that's good news. Hive is a data center technology. Well, Hive is another one of the companies that, well, they used to be a Bitcoin mining company. There's no real technology. They just own a bunch of Blackwell chips. But yeah, they lost less net income than expected too, which is good. So that's kind of the hype around APLD. I wouldn't buy them here in the long run. Like they're kind of the bag holders I've been hearing, but mm. Does Futu move with crypto? Not really. Um, the massive storm in the US has been all over the news in the UK today. Not looking great for you. Yeah, it's pretty crazy. Dat one dude, no way, popped up in the YouTube stream. I appreciate you, man. Hopefully it's not lagging too bad. He said American Express. That's actually a stock I really like. And there's another super investor who loves American Express. That's the homie Warren Buffett. So if we go to the Buffett portfolio right here, we can see exactly what Buffett owns. And obviously his largest holding is Apple. But then a lot of people don't know his second largest holding, or 18% of his portfolio, is actually American Express. It's a big chunk of his portfolio. He loves this company, and they've been a quality compounder, and they're not even like overvalued. Like I wouldn't be shocked to see this company just continue to climb higher. If we look on the right there, the forward PE on American Express is a 22. So that just means they trade at 22 times next year's net income. Very fair. And they print money. Basic metric here, their after-tax net income is 2.5 to 2.9 billion a quarter. It's insane. So what is American Express doing with all that net income every quarter? The best part is they pay a dividend, and that dividend only cost them 580 million. So there's lots of room for them to raise that dividend. But the real winner is the share buybacks at the top here. They did a record 2.3 billion of share buybacks this quarter. They're always doing like one and a half bill buybacks a quarter. They can easily afford it. So that's why the net income is up by 15, but the net income per share, oh, it's on cumulative. The net income per share is up by over 18.5% because they bought back 3% of the company on top of the 0.65% dividend. I can see why this stock has done so well and why Buffett owns them. They are a super shareholder-friendly company. They're great. Just like Visa. Actually, Visa's a great steal right now. Can you look at, I hope I can find this one for you. It's kind of a weird ticker symbol here. FCNCA stock. Oh, First Citizens Bank shares. So this is a bank. We did find it, and they're actually on my watch list. I didn't know that. So let's see. They are a general banking. Oh, this is the company that bought Silicon Valley Bank. If y'all remember all the banking fears, or that Silicon Valley Bank went bankrupt, and then they were the ones that actually bought all their assets. So it's a bank company. Let's see. Here's their net income. They're making every quarter 500 mil plus a net income a quarter. So what's the valuation on this one? They usually trade low. Yeah, so the forward PE is an 11. That's normal for the banks. All the banks trade it. Yeah, the industry average is a 12. Or 13. So yeah, they're actually at a cheap valuation, 11.6 PE. You get a 0.4% dividend, but look at the payout ratio. They only have a 5% payout ratio for a 0.5% dividend yield. That's because, they're at a low valuation and they've been beating on expectations. They expected $43 of EPS. They did $45. So pretty impressive there. Wouldn't be shocked to see that one continue to win. All the banks are doing good. You just look at boring JP Morgan. JP Morgan's done great. Kind of looks like American Express stock. I just threw 1K into JPMO. JPMO. What's this one? Yield max option income. Oh, for JP Morgan. Okay, so this sells calls on JP Morgan. So yeah, you kind of buy this to maximize your income if you are seeking like monthly income or just a high dividend yield. This is when you buy to maximize your income. I'm not sure if this will like total return keep up in the long run, but you're not buying it to keep up. You're buying it just for the income. Yeah, hey Larry, I have a video where I cover all those questions right there, like what platforms do you use? I use all these platforms I'm using are all in the link tree in my bio, and I have a video where I compare all the apps and my favorite things about all the apps. So yeah, this is my favorite one. If you're looking to buy stocks or analyze stocks or anything, this is my favorite brokerage or app right here. Link tree in my bio, very first link there if you want to get it with my affiliate link. If you go and deposit $100, we both get like a free $20 thing of Nvidia, I think. But yeah, you can just type it into your Google or App Store. It's just called Moomoo, Robinhood, or Weebull. So my favorite robotic stock, someone just mentioned. So a lot of people know Rich Tech Robotics. This is trash in my opinion. If I'm looking for a real great robotic stock to buy and never sell and trust for the long run, it would not be Rich Tech Robotics. They're just they're like a startup pretty much. The revenue's it's a million of revenue a quarter. So doing a million of revenue, they lose a couple mil a quarter. It's just like they have no IP, no patents really. If you're looking for a real robotics play, this is my favorite pure robotics play. Amazon's my favorite robotics play. Amazon's number one, but a pure robotics play would be Symbiotic. They have over 1,500 registered IP and patents. They are a warehouse robotics company, and their number one customer is Walmart. They have these robots that help out Walmart's warehouses, and Walmart loves them so much that Walmart owns 12% of all the shares here. Walmart's the second largest shareholder, which is good news there. They're kind of backed by Walmart there. We can go to their website right here. And actually, I can show you. I've done a YouTube video as well. Yeah, they help out Albertsons. All these warehouse companies. They have like a little video I want to kind of pull up there. Oh yeah, like these are kind of the robots right here. These crazy systems. Like I've seen them in action. I've seen a few videos of it, but I wish it showed the patents. Yeah, they really do have like 1,500 plus registered patents. It's pretty insane. And we saw Rich Tech Robotics. They do like a million of revenue a quarter. Well, check out this one. They do 600 million of revenue this quarter. Pretty impressive. How could the report be in 2026 Q2? So every time you see 2026 Q2, some companies, just like Microsoft, I think Microsoft does this. They report in something called fiscal years. So there's full year and then there's fiscal year. It's kind of confusing. That's why it says like Microsoft 2026 Q1, Q2. Sometimes it's the same past 3 months. It's just they report in fiscal years. It doesn't matter. What platform you're using? Yeah, hey, again, if you want to get this platform I'm on or brokerage, it's in the link tree in my bio. Very first link there. App called Moomoo, my favorite one. Okay. And BLDR by the dip this week. So yeah, BLDR, this is a very interest rate sensitive name. So they went crazy these past 2 days right here. So yeah, their right now numbers don't look good. Like I can totally understand why they're off their all-time high of like $194. If we go down here and we just look at the revenue, the lifeblood of the company, the sales, the revenue's down 6.8% year over year after it fell 6.6%, after it fell 5%. Like you can just kind of see at the bottom, the year-over-year growth rates of the revenue are all negative. So negative growth. And same with the margin. So here's the thing. Revenue's down 7. The net income is down by 57. And that's real. So that means the net margins are falling. They only had a 3% net margin. So, but all the interest rate sensitive stocks are all booming these past couple of weeks. The REITs are, especially the home builders, the mortgage companies. So, and same with these ones, like the building companies like Builder, Cavco. So yeah, specialty building products. I'm pretty sure this is Builder's First Source. My whole neighborhood, I see Builder's First Source trucks in my neighborhood all the time. The roofing shingles on our house are Builder's First Source. So, hey, there you go. Yeah, okay. And they're at it. What's the forward PE though? That's kind of the thing here. It's probably, well, it's a 30. Okay, so the current PE is a 23, but the forward PE is a 33. So it's not crazy cheap. Like even at this price, like it's not a super steal of a deal. There's some other great ones I like as well. There's Owens Corning. They own like Pink Panther Insulation. They're seeing that same residential spend massive decline right now. But yeah, they do roofing, insulation, doors, just kind of these kind of commodities. Yeah, also revenue's negative year over year. But yeah, I actually have been buying the dip on Carlisle Group. It's so boring. They just repair roofs. I've been buying Carlisle and Cavco. They make factory-built homes, like small factory-built homes. They've done pretty good. We're up 13% on Cavco. Okay. Craig said IBIT. Yeah, so if you're looking for Bitcoin just in an ETF, you can buy IBIT if you don't want to buy actual crypto because, potentially you could lose your crypto or who knows. You could just buy the ETF. And what's cool is the ETF, you're SIPC insured for 250 grand. So even if BlackRock messes it up, you're chilling. Just going to do whatever Bitcoin does. And BlackRock won't mess it up, or it can't mess it up. But anyway, that just is Bitcoin in an ETF. GILD, I think they just got acquired, right? Gilead Sciences? No. Okay, I'm slow. Well, maybe. Let's see. Is there any news? They're at an all-time high. So, hey, congrats if you own this stock. So, Gilead Sciences reports positive phase 3 results for, I'm not going to try and pronounce that, Trodilev combination and metastatic triple negative. Okay, so they're getting into like the I don't even know if I should say that just in case of the TikTok rules, but there's they're making medicine, and yeah, they're actually at a cheap valuation. Check that out. A 19 forward PE. That's a very fair forward PE, actually, a 19. So yeah, it looks like this was the thing they just had positive result trial for, is this Trodelev right here is what I was reading down here for breast cancer treatment. So positive results for that, which is great. So yeah, basically what does this company do? They sell a bunch of different prescriptions, it looks like. Oh, it looks like they have some royalty revenue coming in. Let's check out their total. When we combine all the businesses together, the revenue's up 2.9% year over year. So it kind of, the growth is slowed down, single digits, 2.9, 1.8, negative 0.2. So we kind of want to see the growth come back. But whoa, they actually have insane margins. Like, this is really real. They really do have a 40% net margin. So the revenue was 7.7 billion. On this 7.7 billion of revenue, they netted after tax 3 billion. The before tax number was 3.5 billion. They paid their 500 million taxes. The after tax is 3.05. That's insane. So they really do print money, and they really are at a 19 forward PE. And maybe with higher sentiment, like with maybe this is going to lead them to some more growth. Maybe that's why this stock has just been gapping up. The sentiment is in their favor. There's potentially going to be even more growth. And I honestly wouldn't be shocked to maybe see this stretch up to like a 23 PE. I can see why it's at a 20 though, because again, this is single digit, like low single digit growth, not really what analysts want, but that's impressive. Pretty cool there. All right. ISRG, please. Let's do it. ISRG. Sorry if I'm missing stocks here. I apologize. Yeah, Joshua, we said ISRG too. This has a fortress balance sheet. I can't believe how much cash they have. Maybe we should look at that first because they are expensive at a 57 forward PE. They're actually seen as like a medical robotic play right now. They make these medical devices, basically medical instruments and accessories. So they sell them these accessories, these instruments. This is the growth. It's great. It's up 20% after 18%, after 20%, after 12. So great growth. And not just they sell them instruments, but they service them as well. So 15% of the revenue is kind of like this recurring servicing revenue, and it's up great too, up 20% after 12. So and they're beating on expectations. They beat on revenue, they beat on EPS massively, and on EBIT. So no wonder they trade at this massive PE, expensive valuation, because they're so impressive. They beat on every metric by a good chunk. And here's the other thing. This balance sheet right here is insane. They have $9 billion of cash and no debt, like debt-free company, no liabilities. They don't owe anyone any money. They have $9 billion of cash, and that cash earns them, and just interest, literally just interest on cash, 90 mil a quarter. That just adds money to your bottom line. So yeah, the net income every quarter is literally 800, 700 million. Mika said, what apps are you using? Yeah, hey, if you want to get this app I'm using, it's actually in the link tree in my bio, that very first link there. It's actually a brokerage where you buy stocks. My favorite app. But yeah, I love this company. They're super profitable, 800 million net income a quarter, but they did actually have, I don't know what, they just reported earnings. Okay, let's see here. Forecast 13 to 15% procedure growth for 2026. So Ion procedures are up 44%, placed 532 Da Vinci systems. Well, anyway, there's a lot to look into there. I just like this company. I wouldn't go crazy in the stock yet because even at this price, they're expensive, that 50, 60 forward PE, but they're a quality one to certainly put on the watch list because they're really, really quality. What do you think about iRobot? Hey, I think iRobot went bankrupt. Yeah, because of regulators. I kid you not. Oh, they changed the ticker symbol. Amazon tried to buy this company. You see how right here the stock gapped up and kind of traded flat at $39? Amazon was going to buy the stock at $39. The regulator says, no, you're not allowed to. So then the stock, this is the company that owned like Roomba, like those automatic, like, freaking vacuum machines, but there's just so much new competition. Like, who ever heard of like, or maybe they didn't own Roomba, but they're just like, there's so much, just a commodity now, and this stock is bankrupt. Certainly would not buy this stock. And I can see why they're bankrupt. You know what? I actually predicted this company is going to go bankrupt multiple times. Like, they just lost too much net income and the growth was gone. Like, the revenue's down 25% and they just burned through hundreds of millions a year. All right. Um, I'm guessing someone already asked about BNAI. Got in it. Wait, BNAI. BNAI. Brand Elegant Network. Wait, do you mean BBAI? USA, what's up, man? Well, hey, up 90%. I'm glad you made money on this one. Yeah, they're only worth $80 million. You don't really kind of cover these small caps, but yeah, they're worth $80 million. 60K of revenue, so no revenue. So there must have been some sort of positive momentum there. So congrats if you own that one. Yeah, let me know if you're talking about a different stock there, USA. I apologize. CrowdStrike is a huge buy, in my opinion. That is my favorite cybersecurity stock of all time. Nancy Pelosi owns that stock. I'm a believer that, cybersecurity is going to be immune to the whole software slowdown. That's why this stock has done good. When like you look at Salesforce, Adobe, Duolingo, some of these other software stocks are kind of, ServiceNow have done terrible. But I think cybersecurity is specifically immune to that because AI is only going to enhance like hackers. Like hackers will utilize AI and get better at hacking, and the need for cybersecurity is only going up. And it's also like as war fears escalate, cybersecurity normally does good in those environments. So let's see if there's any news here. Oh, CrowdStrike acquires identity secure firm for $740 million. Wow. Study shows CrowdStrike's endpoint security delivers 273% ROI over 3 years. That's an ROI I want. CrowdStrike expands global initiative data. So one reason why the stock is struggling is because if anyone remembers way back here, back in July 2024, I made a video about it too. They had this update that bricked every single PC that did the update. So every single airline at the time did the update, and it literally made that day every single plane in the US sky have to land. I kid you not. It was a crisis, and they are still to this day facing lawsuit payouts. That's why their net income is still negative every quarter. They were making money, but they're still experiencing these lawsuit payouts because of the outage. But the fundamentals in terms of like there's ARR, their annual reoccurring revenue, their subscription model revenue is just up and to the right. It's so impressive. And they do have the most quality like cybersecurity software like to exist, like sim up there with Palo Alto Networks. So they're super quality, but super expensive because they've lost net income every quarter for the past 4 quarters. There really is no forward PE. For the forward PE is a 1,900. So they're extremely quality, but it's probably too expensive to buy now. Hey, what up, Ron? He says, I'd love to see you do a subscriber or portfolio review. It'd be refreshing content for you. You know what? I might do that. I thought about that. I don't think it'd get many views, but I'd love to do that. I might, you know what? Always got to test out stuff one time, right? What does the app? Yeah. Hey, if you want to get this app I'm on, this is a brokerage or where you buy stocks on. It's actually in the link tree in my bio, very first link there. Brokerage called Moomoo, my favorite app to buy stocks on and analyze stocks. It's free, costs nothing. It's an affiliate link too. Someone said Shopify. You know who owns Shopify? Kathy Wood's a big Shopify holder, and I regret not buying Shopify. I used to have a Shopify store. I paid them heck of money, and I paid for the highest tier subscription. Even if you pay for the highest tier subscription revenue at Shopify, you still pay 0.25% of every sale, every transaction to Shopify. So Shopify basically just collects these royalties, and it's insane. If we go to if we just go to the annual revenue right here, this is what you want to see for a growth stock. Every year, this e-commerce giant just hits a new record of revenue every year, every quarter, and not just revenue, but also profits. So if we go to the profits down here, they are making a couple $100 million of real net income a quarter, and another cherry on top is a fortress balance sheet. No net debt, pretty much no debt, but like the slightest bit of debt, but call it no debt at all. So much cash. The cash is earning them interest. They print money every quarter. They're expensive though, but they deserve it. Let's see here. 101 forward PE. Yeah, you can't pay that, but they're on my watch list. They're so quality. Hey, I just watched a new Mr. Beast video today, and it was like sponsored by Shopify. Can we look at Kraken Robotics? Yeah, let's do Kraken Robotics. So this is like I wouldn't consider this one too much of an actual robotics play, as it's just like these crazy cool underwater machines. I don't know if it's too much like an actual robotics play, but they make these underwater vessels that like collect data. It's pretty interesting, like these LiDAR solutions, these sub-bottom imaging. I think that's most of their revenue or whatever. But it's kind of an interesting like underwater machinery, I guess we'll call it robotics play. And what I like about Kraken Robotics is they're profitable. So the revenue's not too much. It's 22 mil of revenue, but that did grow 55%. That's a nice increase. So the revenue's up 55%, 22 mil. And the analysts are expecting next quarter 35 mil. That's interesting. That's going to be a record revenue, 35 mil and then 30 mil. So there's going to be over 100%, revenue growth here. Revenue is going to go from 11 mil to 30 mil and 35 mil next quarter. So, and the thing is, on this 22 mil of revenue, they made 3 mil every quarter. They've made money. Look, they're not losing money. So that's kind of the cool thing. We look at a lot of these other kind of robotic stocks, like a Rich Tech Robotics, a Serve Robotics, these smaller ones in the same kind of realm here. All of them are like starting at a loss, like they're not making any money. But P&G, what makes them unique is they're already like actually making profits every quarter. Which is pretty interesting. And the revenue growth is there. But they did miss on expectations, but it's certainly not a great buy at all-time highs. It's really, I think, in my opinion, pricing in all that growth that they're about to experience. So I wouldn't go crazy in the stock, but there's certainly an interesting one. Thank you for looking. Oh, BBAI. I did get, BBAI right here. Big Bear AI. I wish I could give you real thoughts on this company. They're worth $2.5 billion. Is there any news? Big Bear, okay, this is cool. Big Bear AI, I don't know what this company does, but they acquire Cargo Seer Technologies to enhance AI-powered customs enforcement. That sounds kind of niche-y. Uses computer vision, machine learning to identify high-risk shipments. So it'll like inspect if you have a bad thing in your suitcase or so. I don't know. But anyway, let's look at their actual numbers because that's what matters here. The revenue, so that's not great. The revenue's down 20% year over year, so that's not great. The revenue's down 20%, and they're losing 15, 20 mil a quarter. The losses are worsening. So that's not a great sign. Revenue's down 20% and the losses are worsening, but they did just fortify their balance sheet. I'm guessing from stock issuance. So they've diluted you by basically 700 million the past 2 quarters, but also that fortified their balance sheet. They now have, that's how their cash went from 50 mil to 580 million from just diluting the stock, which was smart of them. Actually, that was genius of them to dilute the stock because they know it's overvalued. But yeah, if someone says it's a swing trade, I'd just be careful with that one. Yeah, I'd keep it as a small kind of position there. What app are you using for the analysis? Yeah, hey, again, this is, if you want to get this app I'm on, it's in the link tree in my bio, very first link there. This is a brokerage software where you buy stocks on, my favorite app. It's an affiliate link too, so it'll help me out. If you go and deposit $100, we'll both get a free stock. But yeah, free app, costs nothing. You get a 3.35% APY on your idle cash there, kind of earns interest. So kind of cool. Let's do Meta. Yeah, we haven't looked at Meta yet. They are the cheapest Mag 7 stock. Has anyone seen the Meta Ray-Ban glasses? I think those are pretty cool. But their main businesses are, Facebook ads. They actually make $50 per Facebook user. They just disclosed that. They make $50 in ARPU per average revenue per user is $50 at Facebook, which is just nuts. But they have Threads. Now, one of the reasons Meta stock literally jumped up on this day is they're introducing ads to Threads and they're introducing ads to WhatsApp. So that's just a nice earnings tailwind. And this advertising revenue is extremely high margin. So if we look at the forward PE on Meta, this absolute behemoth trades at only 22 times forward net income. And here's a crazy part. For Meta, they have 3.54 billion daily active users. So that's like half the world is on a Meta app once a day. They're either on Facebook, Threads, WhatsApp, whatever. They did a record quarter, 51 billion of revenue this quarter. They netted, 19 or 18 billion in net income on this. And one thing being questioned though on Meta is how much they're spending on AI. They're buying so many Nvidia chips, doing like they just issued, actually, this is another crazy thing. Meta for the first time ever actually has a net debt position. They had this Promethean bond issuance for their huge Prometheus data center. They're spending literally more than their net income. They're spending 20 to 25 billion a quarter on chips, startups like Manus, Scale AI, which I think were good acquisitions. So anyway, I love this cash cow Meta. I'd be doing the same thing. I'd be taking all my profits in from Instagram and Facebook and just investing it into whatever I can. And I really love the Meta Ray-Bans. They have a big stake into the Ray-Bans parent company. That's ESLOY, I believe. Yeah, this is the company that owns Ray-Bans, Oakley. Meta owns a good chunk of this stock as well with their partnerships. So anyway, pretty cool on Meta. It's a great never sell stock. Should I hold on to Palantir? Yeah, I certainly would not be fully selling out of Palantir. Maybe trim it, but I certainly would not be fully selling out of them. I have Powell to have if you bought at the right price. Hey, nice, 1998. What's this? Medline. Okay, this is a cool one. They just recently IPO'd. And Jay says Medline is building to become the eventual Costco of medical supplies, the Kirkland formula. Check out Medline. Sure. This is company just IPO'd. And normally what you see with IPOs is they IPO and then they fall like 20, 30%. They tank. But I think the reason Medline has actually just gone up and to the right, it actually is an all-time high. Whoa. Yeah, all-time high on Friday there. I think the reason they've done so good is they IPO'd when the company's already phenomenal. They're already making real 300 million of after-tax net income a quarter. They print net income every quarter. So they trade at 30 times PE. That is still a little expensive, 30 times net income. But yeah, supply chain solutions, Medline brand products, they make 300 mil a net income plus a quarter on that. So the revenue's growing double digits as well. So pretty interesting here. I don't know if I'd buy it at all-time highs, but it's certainly a quality name. Wow, they're already worth $62 billion. That's pretty interesting there on Medline. I wish I could give you more thoughts on them, but they just IPO'd and we don't get too much data on them. Meta's good stock for ad revenue, but I hate them. Everything on their platform requires money. Hey, Meta, they're milking your data. Yeah, I know what you mean. Ooh, YouTube agent, what's up, dude? Someone said SoundHound. I've actually been on their website before. This is a pretty, God, I think it's going to be so commoditized. Apple's already doing the same thing. Basically, what you do is you go to their website, you give them a bunch of your voice's data, and then it can you just type in whatever you want your own voice to say, and it'll replicate it. But it still sounds AI to me a little bit. But yeah, they have the subscription model. If you're a shareholder of this stock, this is the only metric you watch, their subscription revenue. This is what's led to all the hype around them. It used to be a nothing burger, literally no revenue, 400K a quarter. Now, just this quarter, it was 34 million. And, it's all reoccurring subscription revenue. So at this growth rate, what's it going to be the same time next year? So you're watching the subscription service revenue on SoundHound AI, but they lose a boatload of money. I would not buy this stock personally, just because what they do is so commoditized, I think, or it's going to be. It literally, it just replicates your own voice. So I'd be careful with SoundHound AI, but you watch the subscription model because that's been the real impressive number there. And if they keep beating on that, then I wouldn't be shocked to maybe see the stock continue to do good. Yo, no way. MC Pirate with the 25 TikTok gifts. Hey, man, I do appreciate that. Hope you're having a great Sunday. Hey, if y'all want to hit the follow button, we stream every Sunday. I sell nothing. I have no course book. And oh my goodness, yo, we are 10 subscribers away on my YouTube channel from 10,000 subscribers. If you want to support me, there's only one way to support me. It's my YouTube channel. It's called Nathan Roberts. Also in the link tree in my bio. You can just type into YouTube Nathan Robert. I'm streaming on there, and we're 10 subscribers away from 10,000 subscribers. And you can rewind the stream if I talk too fast. So, okay, I sadly have to go in 5 minutes. So let me kind of speed round all these. UPS. Micron. Let me get to UPS really quickly. So UPS, this one's kind of a dividend trap, or they've actually been doing surprisingly good because they're able to raise prices on tariffs. They're moving the price of tariffs onto the consumer, and they're making fees on that too. But yeah, this company, if you look, has a 6% dividend yield. They're going to have to cut their dividend next year, and I'm predicting that they are, but they have a 6% dividend yield. Here's how we can tell if that dividend is safe. So first off, the revenue, the lifeblood, the sales of the company, the revenue's down 3.7% year over year. So that's not great. Revenue's down 3.7, but the net income is 1.3 billion. Okay. So this quarter, it's the highest it's been. Well, is 1.3 billion this quarter. Let's go see how much exactly the dividend cost. The dividend cost exactly 1.35 billion of net income a quarter. So actually, the sad part is for the past 3 quarters in a row, they have not been able to afford the dividend at all. Like, yeah, they made 1.3 billion net income, but all of it, over 100% of it, got eaten to the dividend. So they didn't retain any net income. And that's the sad part about UPS. And we're in this environment where the revenue's negative, their average daily parcel volume's down 6% year over year. It's not a quality name. And I'd rather buy an Amazon. If you like UPS, just like what UPS does, if you don't care about the dividend, you like UPS just for what UPS does, you'll love Amazon even more. Amazon's literally like a UPS, a Walmart, Oracle, robotics play, AI play, subscription play, advertising play, all in one. Amazon's a beast. Thanks again, MC Pirate. How's that with multiple accounts? Love your content. Dude, thank you so much. I really appreciate that. I'm going to buy AMD. Hey, I would not buy AMD at current prices. I actually just trimmed 1 share of AMD, but that's I would be careful with. Super microcomputer. I have to go in 2 minutes here. I'm so sorry. No way, dude. MC Pirate with the huge TikTok balloons. Did anyone see that? That was crazy. That looks so cool. Dude, I really appreciate you, Pirate. If you have a stock you want me to look at in like very last minute stock here, let me check it out for you. TTMI, what's this one right here? TTMI Technologies. Oh, this one's on my watch list right here. Hey, what up, Jace? I appreciate you, man. So TTM Technologies, this is a very cool stock. They're on my watch list. Let me see what they do. So they're in aerospace and defense industry. So as we know, all the aerospace and defense names have kind of been booming right now. So that business grew 20% year over year. Commercial revenue grew 25% year over year. So let's see what their total revenue grew. Revenue's up 22%, and they made net income on that. So no way. On the 752 mil of revenue, they netted 53 million. So that's pretty good. So they're probably expensive though on a forward PE basis. A 44 forward PE. But there was some other reason I really liked this stock. I forget what it was, but there must have been like some sort of unique asset that they own. I forget. Here's their website, TTMI Technologies. Electrical components, Apple industry. 50% of the revenue comes from the U.S. B&G stock. I don't know what that is. B&G. Is this it right here? B&G Foods. Let's check this one out. So B&G Foods is at nearly an all-time low. So I would be careful about that. This stock has not done too well. But let's go see if we can figure out why the stock has not done too well. So specialty meals. Well, actually, a lot of food stocks have done bad. I don't know what this company does, but if you just look at like a Wendy's, like RIP Wendy's, they're at like actually Wendy's stock is lower than it was in 1997. So that's pretty insane. But back to B&G Foods here, this stock is the same price that it was in 2008. So they're at their 2008 price. Let's see what the revenue is. So the revenue, this is not what you want to see. I can see why it's struggling. If you look at the bottom, these growth rates, it's all negative, negative 5%, negative 5, negative 10, negative 8. So yeah, so revenue's down 5% after it fell 8%, after it fell 5%, after it fell, after it grew 2.3. So I can see why they've been struggling. So the revenue's down 5 and the net income is negative for the past 3 quarters. So yeah, look at these losses. This is starting to kind of explain why the stock has been struggling. So I would be cautious in this name. Yeah. Oh, so it's kind of okay. They definitely don't have a sustainable 17% dividend. So I would be careful about that. 17% dividend, just based off looking at these 4 quarters in net income, they can't afford a dividend. So I'd be super careful with that one. I can kind of see why the stock has been struggling. I kind of feel bad. He left such a huge gift and I had nothing good to say about that. Microsoft is absolutely a buy. Anything you buy? Yeah, Netflix does look pretty good. What up, Junior? Awesome show. I've been doing well with DFTX. Let's check this one out. Defiant Therapeutics. So, wow, yeah, they're at like this new 52-week high, multi-year high level, $1.7 billion company. Okay, so they're still a startup or they have no revenue or they're in like their phase trial still. So if we go to the revenue down here, it says no data because they've still never sold anything, not a product or a service. But if I had to guess, maybe this stock is doing so well because maybe they gave some good updated results on a phase trial or something like that. I don't know. But certainly one I'd be very careful with because without any more context, just judging off their numbers here, they have no revenue. They lose a lot of money every quarter. And whenever you lose net income, that money has to come from somewhere. So notice the assets on their balance sheet is just depleting every quarter and the liabilities are going up. So they've really leveraged up year over year. So they really need to get revenue very quickly. That's one thing I just say from a pure financials point of view there. Grab, please. Yeah, I'll be quick about grab. Dang. Okay, I got to really be quick here. By the way, if you wanted the follow button, we stream every Sunday this exact same time. We actually just stream every single day. Domino's, Warren Buffett's last buy. It's actually Google. That was his most recent buy. We can actually check that out too. So here's Grab. If you're wondering what does Grab do, this is just international Uber. They do the exact same thing that Uber does, but internationally. They do ride sharing. And check this out. Here's where the revenue comes from. Malaysia, Indonesia, Singapore, Philippines, Thailand. So notice the US and Canada aren't on here. That's what I like about this stock. That's why Uber, it was genius of them to become the largest shareholder. Uber owns 13% of all the shares, and Toyota Motor owns 5.5% of all the shares. So they're backed by some strong people. Uber only wants to see this company benefit. They're really profitable, making net income every quarter. So yeah, this is your international exposure to the commodity of ride sharing, which is universally needed. So yeah, back to Buffett real quickly. We go to the Buffett portfolio right here. We can actually see his latest moves. His newest position, which was kind of crazy for this quarter, was actually Google. He bought for the first time ever, or he never previously owned Google, and he bought Google. But yeah, he increased his position. You're right. In Domino's Pizza, Lamar Advertising, that's a REIT. Mitsubishi, that's interesting. I wonder how these car companies are doing. But yeah, one thing people are always like, Warren Buffett sold so much Apple. He sold, look at this, check this out this quarter. We go to decrease right here. This quarter, they sold 42 million shares of Apple. They're like, oh my goodness, Buffett's selling Apple. He sold 42 million shares. It's still, after he sold all that, it's still 19% of his entire portfolio. He just owns so much of it. Okay. Where's this information? Yeah, hey, this is a brokerage app right here. If you want to get this app, I'm on. Free app, costs nothing. It's in the link tree in my bio, very first link there if you want to get it. Super microcomputer. The thing is, sad part about this one is the margin crush over here. This is where I actually sold out of Supermicro. I sold out of this company because of this reason. It just scared me away. But if we look at the revenue is negative. The revenue is down 15% year over year. The revenue is down 15, but the net income is down by 60. So what does that mean in English? That means the margins are falling. The net margins fell 53% to a 3.3% net margin. So they're giving customers these bulk orders. They just do a commodity. They install GPUs for you. So there's a lot of growth expected there with all the new data center infrastructure, like the new AMD chips being installed and Nvidia chips. So, okay. Oh, Cinca. And hey, Monkey, D. Luffy, I saw your comment on race. I just can't get to it. Please share your portfolio. Hey, I have 1 million. Hey, I just did a stock portfolio update. If you want to see every stock that I own, I have multiple portfolios here. Too quick to go over. If you want to see every stock that I own, please go to my YouTube channel. My YouTube channel is called Nathan Roberts, also in the link tree in my bio. But yeah, that's the best way to support me. I actually have to go right now. I'm so sorry. And I hate ending the stream because the stream's doing so well. I really have to go, though. I'm so sad. Thank you. Somehow we got 315 viewers on TikTok. I hate to end it, but I really have to go. Thank you very much. And thank you to everyone on the YouTube stream. This was a great YouTube stream as well. I'm going to be live later today. I stream every day, same time. We just do the exact same thing. We just kind of go over my stocks and or go over y'all stocks, and I'll go over my portfolio. But see you all soon. Thank you so much for being here. Hit the like button if you haven't already. It really does help me out if you hit the like button.